This adapt or die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly 1/8 of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he He's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change. But the ocean can also be a solution, because we know that the more life there is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. and we're going to have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Big tech sinks stocks, job growth slows, unemployment drops to 4.2%. The Dow, the S&P, NASDAQ all selling off at or near session lows right now. Right to the numbers. S&P down 66, a drop now of 1.4%. NASDAQ is down 406 points. That is a decline of 2.6%. The NASDAQ 100 index down 2.5%. The Dow now tumbling by 222 points, lower by 0.6%. 10-year up 25, 30 seconds. 10-year yield 1.35%. Spot gold is up 0.9%, 17.84 the ounce, while West Texas Intermediate crude is down 0.5%, 66.18 for a barrel of WTI. Employment growth slowed in November, with the economy adding 210,000 jobs, the smallest gain this year. Reaction to the report from Anastasia Amoroso, Chief Investment Strategist at iCapital Network.
I think what it suggests is that people are maybe a little bit more at ease with the virus now because of the vaccines and testing and all the tools that we have available, and they are coming back and they're finding jobs. So that's a positive, and it's a positive for the Fed.
Apple is slumping after a news report that iPhones of at least 9 State Department employees were hacked. Apple shares now down by 2.3%. Facebook parent Meta Platforms has fallen 20% from its September peak, heading toward a bear market. Facebook now down by 2%. Meta is down by 2%. And Elon Musk's offloading of Tesla shares surpassed the $10 billion mark as he sold stock in the electric car maker for the 4th consecutive week. Tesla now tumbling today by 6.2%. Recapping a Friday sell-off on track for a losing week. S&P down 70, down 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You made it. It's Friday.
Oh, Carol, we got 3 hours to go, my friend.
You're saying we are just getting started.
Yes.
All right, it is Friday, December 3rd, 2021, live from the Bloomberg Interactive Broker Studio. We are streaming on YouTube. Today, Tim, all about jobs, Omicron, and what the Fed may do next. Add it all up, we've got stocks extending their weekly slide, tech in particular.
Yeah, we're going to be all in on that in just a couple of minutes. Also, back to that jobs report on the labor market, Carol, especially when it comes to the millennial and Gen Z workforces. The CEO and founder of the job platform, Catherine Minshew, on what she is seeing in real time.
Keep hearing they want to do it differently. On the latest COVID variant, we're going to hear from Dr. Anthony Fauci. Also in the magazine, we knew it. Drug makers especially knew that more COVID mutations would arise. About a story that we've got in the magazine about how battling them without comprehensive data will be kind of the new normal.
Plus, it's our annual check of the cost of the 12 days of Christmas. You might have heard the preview, 5 golden rings. They're going to cost you more.
Golden rings. Okay, it's going to be more expensive. I mean, come on, I've heard about inflation. We're also going to check in.
That was good, though. You have a good voice, okay? I'm
such
sorry.
a bad one.
I don't think I gave you enough positive feedback there.
Stick to singing in the shower. Also, we've got the top guy over at Lamborghini. I wonder if we'll have one of those under my Christmas tree. I'm guessing
No.
Probably not. Maybe a super yacht?
It doesn't even matter if
How
it's
about
on
a
your
super
list.
yacht?
We're talking super yachts as well. Doesn't fit under the tree. I'm sorry.
No, it does not. Does fit, though, in a big port. All right, let's get to it and the Market Drivers Report. Let's set the Business Week agenda, folks. Lots going on. Kriti Gupta in the house, Bloomberg Markets correspondent here at Bloomberg News. Carl Riccadonna also in the house. Welcome back. Chief Industry Economist at Bloomberg Intelligence. Both in our Interactive Broker studio. Bring out some wine and we'll have a party. But I don't know.
I don't know. Should we be partying right now?
Well, Carl, I'm going to start with you because let's start there. The jobs report, I felt like really, really smart people were like, some good news? Some questionable news?
Remember
my
when
Yoda sound. Did you notice
210,000
that?
used to be a really strong jobs report?
Way back?
Yeah,
Or
way
not
back.
so way back.
Long time ago. Disappointing result today. This was way below even the most pessimistic forecast submitted to Bloomberg. So, in a month when the case count was declining and we thought that folks were becoming more comfortable with returning to the labor force and taking jobs and spending and whatnot. That wasn't the case. And so what I'm concerned is this looks a lot like November of last year when we had a big disappointment on jobs. Then over the course of November, December, the case count skyrocketed.
Right.
Sounds familiar, right?
Yeah.
And then December was a real bust for payrolls. And so, this creates bad optics for a Fed that's trying to accelerate the taper at the December meeting when the case count's rising, jobs are disappointing, and equity markets
ask about labor
are not looking
participation, though.
We do, because it's not all bad news. There was some,
Right?
there were some silver linings in there.
If you call labor force participation running at the same level it did when Jimmy Carter was president, then sure, that's good news. But there's
You
a
are a
long
downer.
road to come back here.
Seriously?
And you're a downer based on what demographic group you fall into by age cohort. So if we look at the very young, the new entrants to the labor force, young kids coming out of college and high school and whatnot, that has basically fully rebounded. If we look at prime working age population, it's coming back, but it's still got a ways to go. And if we look at kind of a 55 plus type of crowd, I'll just stop there.
Are you looking at me?
No, I was going to say, and I happen to be looking
Off
at you,
with
but
his
I'm
head.
not tying you into the 55 plus crowd. We know that we know how old you are, and it's much younger than that.
Do you? I don't.
But 55 plus crowd, it's how you feel. It's how old you feel, Carol. If we
late,
look
buddy.
at that demographic, very, very little
Yes.
recovery whatsoever.
The Great
And so
Resignation.
the problem is it the resignation, or is it folks still afraid to step off of the sidelines into the labor market? A big concern of the Fed is the scarring that could potentially happen to the economy. And when you look at both prime age and older workers, they're not coming back. And if we look at it slightly different way, if we go industry by industry by industry, almost every single sector is still operating below February 2020 levels. So this is not just a leisure and hospitality story. This is broad-based across the economy.
No questions there.
Hey, Kriti Gupta, come on in here. And how is this manifesting in today's trade?
Yeah, well, first off, I'm just going to add one little eco thing, even though I'm not the eco person in the room here. But November is supposed to be historically a very strong month for jobs, right, Carl? And to see a miss on this particular set of months data is extra bad in addition to the miss. Why the market's selling off, though? It might be partially because of the payrolls report, although it's worth mentioning when the headlines did drop, the initial reaction was the opposite of what you're seeing right now. You saw futures higher, you saw the stock market open, all sectors in the green, bond yields were dipping, and then you saw this sell-off as the market opened. So a lot of this is tech-driven, a lot of this is just pulling cash off the table, but remember, it is Friday, volume is super low. This looks a lot like what we saw last Friday, where people just aren't at their desk and they're de-risking before the weekend.
Jobs came out at 8:30. The market turned around at 9:30, right? So you can see that it wasn't really the jobs catalyst necessarily that was driving the narrative in the markets.
That's really, so are you saying COVID or what?
Well, it really made the turn when President Biden had his press conference, and of course, he was coughing and ill, and the press didn't care about the jobs report and cared more about his health and whatnot. And I'm not saying that drove it, but there was the timing there. So I haven't had the time to review the full press conference yet. Maybe he said some things that the markets didn't like as well.
We should note too that we did hear from the president's physician just in the last hour.
He does not have COVID.
Doesn't have COVID. He doesn't have the flu. He said the physician said this is what's referred to colloquially as a frog in one's throat. He's taking over-the-counter medication right
But
now.
I have to say, I went to make a hair cutting appointment or hair coloring appointment. Just telling everybody, because my roots are in. But
Carl
and my person who does it says I've got COVID. I can't do it. So it's just a reminder that we're seeing these COVID cases come up. All right, great to have you back in the house. Kriti's going to be back a little bit later on.
It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. You can learn more at GEP.com.
All right, today's number, 25 million. Saks Fifth Avenue's wealthiest clients will be getting calls from their personal shoppers in the coming weeks about an odd-looking statue of an astronaut that's priced at $25 million. The 4-foot-tall, 80-pound sculpture titled Frozen with Desire is scrawled with phrases like dreams and love and want. It's also encrusted with 6,200 diamonds, which mainly comprise the spaceman's sparkling visor.
Is that where the 25 million comes in?
Is this like the other thing, the 12 Days of Christmas?
Yeah, this is going to be more expensive this year.
I'll take the yacht or the Lamborghini.
Okay. Fair.
Or the Lamborghini. All right, let's get to World and National News. Let's toss things over to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol, more and more states are now reporting they've seen a coronavirus case with the Omicron variant, including Hawaii, New York, California, Colorado, Nebraska, and Minnesota. CDC Director Rochelle Walensky says officials are tracking all of them.
CDC will continue our robust collaborations with state and local public health authorities to identify cases as they emerge, to support contact tracing of those newly diagnosed cases of Omicron, to encourage post-arrival testing of international travelers, and to assist with all implementation of prevention strategies.
Walensky says while the Omicron variant is certainly the headline these days, the Delta variant still makes up 99.9% of the cases in the U.S. She says the best protection against that is vaccinations and boosters. A new Gallup poll finds inflation is causing financial hardship for 45% of U.S. households.
Of the 45% of households that say they're facing hardship triggered by higher prices, 10% say it is severe enough to threaten their current standard of living. 71% of households with annual incomes of $40,000 or less are feeling the hardship, compared to 29% of households making $100,000 or more. 47% of families with incomes between $40,000 and $99,000 report financial hardship caused by inflation. Amy Morris, Bloomberg 99.1 and 105.7 FM, HD2.
As you've been hearing here on Bloomberg, hiring slowed in November. The Labor Department says employers still added 210 jobs, but that was the fewest in nearly a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons, there in our D.C. bureau, checking out World and National News. And you listen to any World and National News update right now, and atop the list is what's going on when it comes to the latest COVID variant. We're talking about Omicron.
We're also seeing, as a result of that, we're seeing some things happen. We saw yesterday, big companies saying, hey, don't come back to work in January, don't come as expected. We're holding off indefinitely there. Big tech company doing that. Let's talk finance, though, because JP Morgan, Carol, is canceling carols as the Omicron threatens holiday parties. Bankers in London that were hoping to mark the end of a hectic year in the financial markets with a blowout holiday party, well, they're set to be disappointed. The Omicron variant prompting firms to cancel or scale back their end-of-year celebrations.
We also saw British American Tobacco postponing a December 7th media reception at its Thameside headquarters, given the evolving COVID-19 landscape. We keep hearing different things coming out. And I do want to point out that, we often talk a lot, too, about what's going on in the New York metro area. New York reporting 11,300 new COVID-19 cases. That's the most since January, as dozens of hospitals are neared capacity.
Yeah, we should remind people this is New York State, not New York City, and
Correct.
It's definitely different in different parts of the state. Western New York is seeing a surge right now, but New York City, things are actually looking pretty good. As far as numbers go, total patients hospitalized for the virus, Carol, they climbed more than 1,000 in a month, reaching 3,093 on Wednesday.
Did you mention this anime?
No.
My husband actually texted this to me earlier, too. It's like, you kind of can't make this up. Omicron and Comic-Con kind of thing. Anime fans dressed up in robes and armor and colorful wigs pushing their way through throngs of people to reach the entrance of New York City's 3-day confab of Japanese pop culture enthusiasts. This is something, though, that the crowd's storming, pent-up demand, but COVID protocols not always enforced, so you do think about, okay, so what's this going to do to potentially a spike in cases?
Yeah, the city's now faced with warning 53,000 people who came to the November convention to ask them to immediately get tested for COVID-19. This after an attendee contracted one of the first confirmed cases of the Omicron variant.
All right, we're going to talk more, certainly, about COVID, many different ways. We're going to hear later on, too, from Dr. Anthony Fauci right here on radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. We've got the Dow, the S&P, NASDAQ bouncing along the bottom right now. Right to the numbers. We'll give you the why in a moment. Here it is. Jobs Friday. The S&P down 64, a drop of 1.4%. The Dow down 228, lower by 0.7%. NASDAQ down 396, lower by 2.6%. The NASDAQ 100 index down 2.5%. Russell 2000 down 2.4%. Stocks are extending their weekly slide as traders weigh a mixed jobs report against prospects for stimulus unwinding by the Federal Reserve. They're also keeping an eye on the COVID variant. Right now, we've got the 10-year up 26/30 seconds, 10-year yield 1.35%. Spot gold up 0.7%, advancing $13 the ounce to $17.81. And West Texas Intermediate crude oil down 0.7%. A WTI right now is at $66.02 a barrel. Recapping, a sell-off on Wall Street. Losing week right now. The S&P's down 69, down 1.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've been talking about it. Certainly one of our top stories on this Friday, a Jobs Friday. U.S. job growth registering its smallest gain this year, while the unemployment rate fell by more than forecast to 4.2%. That feels pretty low. Offering, though, a mixed picture that may nevertheless push the Fed to quicken the wind down of pandemic stimulus. And this is what we're all trying to figure out right now. Really, what does this all mean when it comes to monetary policy in the U.S.?
It's also happening at a time when that survey didn't even cover the part of the month where we even knew what the word Omicron meant.
Exactly. And you do wonder how that might impact things, which is why the next jobs report could be even more important. All right, let's get to it, though, because someone who sees a lot in terms of what is going on in the labor force real time, especially when it comes to millennials and Gen Z individuals. Let's bring in Catherine Minshew. She's CEO, co-founder of the job placement and career platform Use. She's on the phone in New York City. Catherine, great to have you here. How are you?
I'm doing great. Thank you so much for having me.
So how do you see the labor market based on what you are seeing, the type of activity and volume that's going on in your platform?
You know, as you mentioned, it was a mixed job reports with both the payroll increasing by a smaller percentage than forecast, but that drop in the unemployment rate to 4.2%. And I think, frankly, it's not a huge surprise, right? There are a lot of contradictory trends in the economy right now. So I think that this was broadly as expected by at least a lot of the folks in my corner of the labor market.
That's so interesting because it wasn't expected by economists. We heard from Carl Riccadonna that the 210,000 number that we got, that headline number that we got in the change in non-farm payrolls earlier today, that was lower than even the lowest number that came from one of the analysts surveyed by Bloomberg.
That's fair. That's fair. I do think it was a little bit under predictions, but I think, first of all, we did see some additional jobs added to previous tallies in September and October, which takes away a little bit of that sting. And what we are seeing is that people who entered the labor force in November, they were hired really quickly. And so I think we have certain industries and sectors where there's white-hot competition for talent. We're seeing that in technology, in warehousing, and anything related to e-commerce. And then obviously others that are really struggling to add jobs and struggling to hire. So hospitality, travel, leisure, and even, frankly, retail, as I think a lot of shopping moves online.
Hey, Catherine, you mentioned when we just started going a lot of contradictory trends in the economy right now. What do you see as contradictory in particular?
Well, I think that we're seeing, firstly, that a lot of newer entrants into the workforce, and particularly Gen Z and millennial job seekers, they entered, in many cases, they've just come out of this really tough employment market. 2020 was a really hard time for a lot of workers of all types, frankly, to get a job, to stay employed. But at the same time, people are much more choosy right now, and so we're seeing spikes in worker pay. We're seeing a lot of people choose to opt out of the workforce unless they find a job or an employer that meets certain criteria. So I think we're seeing both big differences within industries and sectors of the economy, but also some very contradictory data coming out of, again, particularly the demographic that I spend most of my time with, which is Gen Z and millennial. There's a lot of indications they're looking for more than compensation, but also, at the same time, salary remains important. A lot of things in the data that I think reflects the fact that there's a lot of uncertainty in the economy right now.
What were the similarities that you saw in today's jobs report that you also find in your work and on the platform, the Muse?
Yeah, well, I think the fact that the unemployment rate is so low is certainly reflected in what we see on the Muse. We have so many employers that just literally cannot fill their roles fast enough. Yeah. And it's causing major disruption to their businesses. I'm sure you're hearing about it from other guests. But some of that is because some workers are opting out. Some of that is because workers are raising their standards, like I mentioned. And so, we've also been surveying a lot of workers about what factors are they considering when they're thinking about whether to get back into the labor market, whether to change companies or change jobs. And people are flagging things like, they're looking for better perks and benefits than they had in the past. They are looking for companies that are committed to diversity, equity, and inclusion. There's a lot of burdens on employers that weren't perhaps there 2 years ago before the pandemic started in the same way.
Catherine, I've been doing a bunch of reporting and research on just the growth of entrepreneurship, people starting up their own business. We saw this coming out of the financial crisis. We're seeing it once again coming out of the pandemic. Women in particular are kind of, I feel like, voting very clearly by saying maybe we don't want to go to the traditional establishment, stay in corporate America. We want the flexibility. You understand that you've started your own business, right? And it's a lot of pressure, it's a lot of stress, but you do gain a lot of flexibility. What do you make of those trends and the significance that may be having on our labor environment right now?
Absolutely. I think you're spot on. And in fact, when you look at some of the biggest technology companies that have shaped our lives today, a lot of them were started back post the financial crisis between 2008 and 2010. I think Uber, Airbnb, a number of household names. And so I'm personally excited to see what next massive companies, we see started. And then you also have a lot of people that are not starting high growth Silicon Valley businesses, but are starting small businesses, are going freelance. And I think that, it is something that has become easier than it was in the past due to all of the different off-the-shelf products and services that are designed to support entrepreneurs, to support small business owners. I am not at all surprised that a lot of women looked at the way corporations responded to COVID and said, no thanks, I'm going to set my own hours. But I do think some of those workers will re-enter the more traditional labor force in the next few years, but we will also see a lot of people who this was the push they needed to get into entrepreneurship. And I think that's really, I think that's a really great thing for the broader economy. Obviously, right. I'm clearly biased here.
No, but you understand it. You get it. We've often seen, and this year alone, too, we've seen a lot of female-founded companies IPO. So that is something, Tim, that we've seen as well.
Hey, Catherine, as Americans have remained on the sidelines, how concerned are you, and how concerned should the Federal Reserve be about scarring when it comes to this job market? The idea that people who are off the sidelines for a long period of time will have a lot of trouble returning to the job market.
Yeah, it's a really big issue. And I think it's exacerbated by the fact that the skills most in demand by many employers today are not the ones that were taught or prioritized, 10, 20 years ago. You have incredible demand in a lot of digital technologies, data-focused roles. And so I think that, as a society, as individual companies, I'm hearing retraining and reskilling be talked about more and more, because I do think that you have both just the natural scarring of people who have been out of the workforce for a while, but also the fact that some of the jargon and the skills that are most in demand change. And if you don't have programs and ways for people to get that current again, I think you have the risk that a lot of people won't be able to do it without support.
All right, we're going to leave it there. Hey, Catherine, thank you so much. Great snapshot on what's going on, certainly among the younger generation when it comes to today's labor force. That's Catherine Minshew. She's founder and chief executive officer of the Muse, joining us on the phone in New York City. Well, I love talking about high-end cars, and we've got a great guest to do that.
What about supercars?
Supercars work for me. Just a couple of days ago, our next guest came back to a company he knows well, having been president and CEO of Automobili Am I saying it right? Automobili, Lamborghini, from 05 to 2016, back in the top spot. So great to have with us Stefan Winkelmann. He is president and CEO of the company, and he's here in our Bloomberg Interactive Brokers studio. He's also president of Bugatti. So you got a lot under your plate, or on your plate. How are you?
I'm fine. Actually, I have to say that I'm not in Bugatti anymore
since
the beginning of November. So it's 1 month now that I'm dealing only with Lamborghini. So I'm happy about it.
Forgive me, because I was trying to make some sense of some of the changes. And all of this is under Volkswagen, correct?
Yes, it's under the Volkswagen Group, yes.
So tell us about the environment right now. What are you seeing in terms of demand? You know what we're interested in. It seems like consumers are out there shopping, especially wealthier customers. What are you seeing?
So after the first and second wave of COVID, the market in luxury and super sports cars was coming back tremendously, and this year we will have a record year. And if you buy a Lamborghini today, you will get the delivery only in December 2022. So we have 1 year waiting time. We increased production already twice. But also the super sports car business or the luxury business is not only about delivering fast, it's about not running for the peaks, it's about producing less than demand. So
people usually wait anyway to some extent, right? Is that fair?
They wait, and they're willing to wait. And this is good because there is no other way.
What about when it comes to prices and specifically raw materials? We talk so much about inflation. That is the narrative right now when we look at many parts of the global economy. How are you dealing with higher prices? How high have they become for inputs? And are you passing those along to customers?
But generally, I have to say that we are okay. So we are not passing anything to the customers on higher material costs right now. And we are not suffering like other car manufacturers about the shortage of the chips. So here we are well treated by the Volkswagen Group, being a small company, and this is an advantage. So at time being, there is no, let's say, critical point in this sense for us as Lamborghini.
So no problems at all?
But no problems at all. You never know. We have here and there it's always with suppliers and with supply chain that there are things not going accordingly and prices rising. But we have not inflated our prices higher than in a normal state. So this is not something we are taking advantage of.
Stefan, we were talking, Tim and I, with another global auto executive who's been in the industry a long time, has had different spots around the globe. You too, you were at Fiat. You understand this world. You understand it from several different market vantages. I'm curious, he said to us, it's kind of one of the most exciting times in terms of some of the disruption that's going on, the move towards electrification. There's a lot going on in the industry. How do you kind of sum it up in terms of what's going on right now? And he's got a big smile for everybody on radio.
I have to say that for us, on one hand, it's a great advantage that the market is booming. So this gives us the peace of mind, at least, I think, for the year 2022, to concentrate on what is coming next. As you said, is a disruptive time, is not an evolution anymore. So you have to make a clear cut and to think about what is coming next. We are already on the way to hybridize all our lineup. Hybridize means that you still have an internal combustion engine and the cars will be plug-in hybrid. We will maintain our icon, our engine, which is an icon, the V12. So this will be a complete new engine.
And I know you talked with our Matt Miller, who we always talk about, who loves supercars. And he'll say, well, how can you have a supercar without the engine noise, right? Like that is such a big component.
And all the lineup will be hybridized by the end of 2024. And this is enabling us to reduce the CO2 emissions in comparison of today by at least 50%. So this is a good step to start with.
What comes after 2024, though? Is it full electrification ever?
We see that we will have a fourth model. Today we have 3 models, so they will all be hybridized. In the second part of the decade, we are looking forward to have our first full electric car. And we want to have, let's say, a split of the lineup, 2 super sports cars and 2 more versatile cars. And the super sports cars we want to keep with internal combustion engine as long as possible, maybe with synthetic fuels.
Would Lamborghini ever go fully electric?
Yes, as I said, there is for the more daily usable car like the Urus.
No, I mean like not even offering an internal combustion engine vehicle.
But this is something we have to see after 2030. It depends a lot about what the legislator is going to tell us, how emission goal goes ahead, and if there is an opportunity for synthetic fuel. If there are synthetic fuels in the future which are CO2 neutral, then there is a good opportunity that we stay with the super sports car also after 2030 with internal combustion engines.
Stefan, what do you hear from your clients about? I mean, obviously they're watching the trends in terms of electrifications, and we're seeing sophisticated cars on that front come along or increasingly. But I'm curious, the people who buy your cars, do they really want an electric Lamborghini?
They want the peace of mind of more sustainability, and we have to deliver the promise, and we have to keep the promise that the performance and the design are better than the generation of today. If these two things go together, then for hybridization, there is no issue. They are going to follow us, and we see this also because we do testing, we do clinics, and this is something which is already digested.
So it's done.
It's
The
done.
horse has left the barn.
No, we cannot roll back.
Well, the other thing is, let's not forget, and let's be fair. I mean, regulators, policymakers, right? The world, we understand the importance of kind of moving in this direction, and that's just the way it is.
Yeah, we cannot move out. We have a social responsibility, even though with our cars we are not changing the climate. But I think that everybody has to do his part of the business, and I think that this is important also because it's more and more important not what you think about the cars, but what your neighbors think about the cars. So you always have to have the thumbs up.
Yeah,
this is important.
Hey, how do you keep the Lamborghini driving experience with the hybridization of one of these vehicles? Because if you think about a hybrid car right now, I mean, you know when it's there because it slows down at a stop sign, the engine turns off, right, and then starts back up again, and it has a unique sound. How do you keep the driving experience, the Lamborghini driving experience?
Driving experience, so performance will be always our top priority. And when we speak about hybridization, we speak, yes, about range extender, but it's even more about a booster. So it's increasing the power of the engine. The weight-to-power ratio is even better than the one today, so the car will be more performing, and you still will have the sound of the engines you have today. So this is positive, at least for the next years.
You talked about strong demand. Have you been surprised at how strong that demand has been? I think certainly at the beginning of the pandemic, nobody knew how this was going to play out. Nobody had the crystal ball. We hadn't seen this before. I'm curious, though, when did you start to say, okay, wait a minute, things will be okay?
After summer last year. After summer last year, when we recognized that this was a constant flow and it was going up and up and up. Every month we are selling more cars than we can deliver, and this is, as we speak, still ongoing.
Do you have the workers you need to do everything? That's another thing that we've certainly seen on a global level. We're certainly seeing it here on a jobs day in the United States, where we have a lot of companies that are looking for workers.
No, we are fine. We are set. It's clear that we are in a phase of change. So competences are going to change, and we are only also looking for a new type of business or jobs. And this is not happening overnight. So we have enough time to adapt to the new situation. So this is okay.
How do you bring in that next generation of Lamborghini buyers? How do you bring in millennial customers?
You just drive up to their door. You just drive up to their home, Tim, and
but
you just...
But is there a difference, though? Is there a difference in what potential customers who may be able to afford a Lamborghini in their 20s and 30s want right now, or how you want to reach them now so then when they are in their 40s and can't afford this, they can buy one?
And I think about, we had a conversation with a senior executive at De Beers, and we talked about that a younger generation not so interested in diamonds. So what are you seeing?
More interested in experiences than things, for example.
But I can tell you that if you look into the social media, we are the highest by far in the super sports car business, or also in the majority of the car business. So there is a lot of interest of the younger generation in our brand. Our brand is cool. Our brand is young. Design and performance are top. They will not sit at our table if we don't speak about sustainability. This is clear.
Right.
They want to have a sustainable car. They want to have a digitalized car. These are the two things which have to work together. And then design and performance, which is, let's say, the most important thing in a Lamborghini. These things have to fit.
Yeah, I got to say, I got a nephew who who's young and would definitely have no problem with one of your cars.
Regardless of whether or not it was hybrid version.
Exactly. What do you get? What's the benefits? I think there's some thoughts about, we're seeing a lot of unlocking of value among companies where you spin out certain brands. You're under the Volkswagen brand. There's many, many different brands under the VW umbrella. What's the benefit of being under that umbrella? Are there benefits to also spinning it out and unlocking some value there from an investor perspective?
So a spin out is not planned. What the benefit is clear that there are synergies in terms of suppliers. If we are asking a supplier to produce, 10,000 pieces a year or 100,000, you have a different leverage, different price, different quality. This is one thing. Then in terms of the platforms, in terms of all the things which are under the hood, which are not perceived as brand relevant, are things which are helping, like electronic platform, like air conditioning. There are a lot of things which are high investment and nobody knows about that. And we deliver a quality which is in our type of business unique. And this, therefore, the benefit for us is really important.
I just want to ask about the connection between marketing and what you did at Art Basel recently, and how you can draw a line from that to selling more vehicles.
But if we do things like Art Basel, it's because the community is very close to our customers. Our customers go there. So having the opportunity to speak to them in an environment which is not typical automotive driven is important to stay present in the mind of the people and also to be part of the crowd. And this is not about selling cars, but this is about creating after the let's say the sales. The most important thing is to create community, to have events to go on and off the racetrack, and also things like Art Basel are important, that you go to dinner together, you get to know them, and you are in the environment they appreciate.
Haven't been at Art Basel, I can see how it's a perfect fit. Hey, just got about 20 seconds here. Geographically, where do you sell the most Lamborghinis?
In the U.S. U.S. and China is number 2.
China's number 2. All right, we're going to leave it on that note. Thank you so much for finding time for us, and have a great, safe holiday season.
Thank you very much.
Really appreciate it. Stefan Finkelmann, he's president and CEO of Automobili Lamborghini, joining us right here in our Interactive Brokers studio.
You ready for your Lambo?
Yeah, I like cars. You know
I know
me.
You do.
You know I like cars. Anyway, it's just really great to get a check-in on that. And it's really a certain slice of the market, and you do understand. It's going to really fit into, we're going to talk about super yachts in a little bit, so it all kind of fits in. All right, just under 90 minutes to go to wrap up the trading day and the trading week. It's time to join our TV team for the countdown to the close on Bloomberg Radio, TV, and on YouTube.
This is the countdown to the close. Romaine Bastakira alongside Caroline Hyde and Taylor Riggs, welcoming back our Bloomberg television audience and welcoming in our Bloomberg radio audience. Carol Masser and Tim Stenovic, of course, who we always catch up with every day on Beyond the Bell around the time of the closing bells. Decided to catch up with them a little bit earlier on what is a really wild week, Carol, where we've seen some pretty wild moves for the Russell 2000, the S&P 500, and of course, Treasury markets.
Yeah, exactly. I think that bond market story is such a big one, and we're trying to really all assess. It was a bit of a mixed jobs report today. We know that, and I think we're trying to figure out what does it mean for Fed policy. Maybe we have to wait another month, Tim, to really get some clarity about what the Fed may or may not do. I think there's still a lot of questions out there.
Yeah, there are, and certainly the volatility we've seen in recent days is a big part of the story, but also a big part of the story is what we've seen with some of the big tech high flyers. I talked Meta Platforms, for example, down 20% just over the last couple of weeks. NVIDIA suffering as well. Look what's happening with DocuSign, for example, today. So we are certainly seeing something play out, at least when it comes to those high-flying tech players.
And the Chinese-related high-flying tech players as well. I mean, what a story for unfolding with Didi. It was, of course, went to the public market here in the US, and against the wishes of its own Chinese regulators, it would seem, and now they're delisting. Is this going to be a theme? This, of course, adding to the woes that we see in the technology sector, which has been one of the worst performers.
It's so interesting. I was speaking with Howard Marks of Oaktree a few weeks ago, and he said when everyone says China is uninvestable because of headline risk like this, that is when you go in. But it does make, I think, some investors nervous. And Carol, I don't know what the discount rate is to figure out how much of a headline risk, how much extra you need to be compensated for this headline risk?
No, it's a really good question. And I feel like I want to go back to the Chinese stocks because I think it's a story we had so much to focus on between Jay Powell and his comments, certainly the Omicron variant. But you look at the NASDAQ Golden Dragon China Index, it's down about 15% this week, down 9% today alone. We see our regulators, the SEC, planning to force foreign firms to open up their books. And I do think we do wonder, what does this mean for our investment involvement here in the U.S. when it comes to foreign firms, guys?
Well, I mean, I think we've already seen the trend line for quite some time, both in terms of all of the pressure that the U.S. has been trying to put on some of these companies, and now the pressure that the Chinese government has been putting on its own companies. There was a great story today in the New York Times that talked about the idea that, China doesn't need Wall Street in the way that it needed them maybe 4 or 5 years ago.
It is interesting, though, because companies still really want access to the Chinese market. We just talked with Stefan Winkelmann, the chairman and CEO of Lamborghini. After the United States, guys, China is the most important market. It's the market where they sell the most Lamborghinis. Now, I know we're talking Lamborghini here and not Disney products necessarily, but you could say the same thing about Nike, about Disney, and you see the way that these companies want to access these markets.
And companies are completely exposed from a supply chain perspective. Just think of Apple on the downside today. We've lost about 3% of value over the last 3 trading days. They've been falling significantly, worst 3 days that we've seen back to the end of September. And this, of course, is important for the overall benchmarks, for the overall sentiment on the market when the most valuable stock falls to such an extent. Of course, this related more to hacking news, but also this is a company that is suffering supply chain headaches, which then crimps demand if we're not going to see that loyalty stick for eventually when you get your iPhone 13 or indeed 14 made and shipped to you.
And dare I say it, not to bring it back to the macro, but was any of this, Romaine, sort of signaled from the comments that we got from Jay Powell? We were sort of hinting of, it's a new Jay Powell.
Yeah.
But when
you primarily were the one hinting at Jay Powell. The rest of us pretty much saw the same old Jay Powell. But to your point, which I think is a very serious point here, is the idea that he admitted that basically they miss certain data, that they were looking at one set of data that basically told them this was transitory, and that when they looked more at the supply side of things, they realized the persistence of this, and that they now need to shift and for the most part catch up. And everyone we talk to talks about this idea, not just of the Fed accelerating the potential for rate normalization, but the idea here now that they may have missed their opportunity to do so in a way that's going to bring this economy to a softer landing.
Just going to say that Jay Powell also, though, pointed out that, when it comes to what happened with the supply chain inflation, none of this was linear, right? And who would have anticipated? We haven't lived this scenario of our global economy shutting down because of a pandemic. One thing I will say, Caroline, when it comes to Jay Powell, he's always like may, perhaps, and so on and so forth, which says to me we're going to be data-driven, data-dependent.
What is this?
Yes.
Why is everybody ragging on Powell?
I'm not ragging. I'm saying he leaves the door open.
And why is Taylor not
smart.
singing up the bond market? Because, she's been telling us for ages, it's basically the bond market
because
that's been
I
calling
tried
this for a
and
while.
you guys all keep calling me crazy, but the bond market had been telling us.
All right, we got to run, guys. That's going to do it for the countdown to the close. Live on
Have
Bloomberg
a great
Radio.
weekend, guys.
Bloomberg.
We'll see you on
No,
Monday.
don't go yet. Don't go yet. We're going to be back together at 4 p.m. Wall Street time for Beyond the Bell.
1 hour, 15 minutes, and 2 seconds.
That's right. We're going to take you down to the closing bell. And stick around at 3:30 p.m. today. Bloomberg TV and Radio are going to catch up with Dr. Anthony Fauci, of course, the top infectious disease doctor here in the U.S. Stick around, everybody.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so a lot going on today. We know it, a lot going on. I feel like with our team, we all realize, it's just been a bit of a crazy week between Jay Powell, the COVID variant, so much news going on.
Yeah, I think that it's so important to keep in mind that the jobs report that we got today, Carol, as I said earlier, didn't even take into account the part of the month where we were talking about the Omicron variant.
Yeah,
staying on the sidelines.
Exactly, and I think it's safe to say that it's all about, recalibration, and I really do think that is very largely what we're seeing. And every time we get interesting data points or developments, we have to remember that the market's going to adjust a little bit. The bond market, though, we have to keep an eye on.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. U.S. Secretary of Labor Marty Walsh tells Bloomberg he feels good about where the U.S. economy is headed despite job growth slowing to show their smallest gains of the year with 210,000 jobs added last month. He says the workplace is undergoing a transformation.
I think that the pandemic has changed the way, or at least had conversations about the way the office looks, people working teleworking. We've seen 30%, I think last month, if I get the number correctly, 30% increase in entrepreneurship in this country.
Secretary Walsh says one plus is that the unemployment rate has fallen more than expected from 4.6% down to 4.2%. President Biden has signed a bill that will keep the government running. The Senate passed a stopgap measure last night to keep agencies funded until February 18th. That's after conservative Republicans agreed not to throw up procedural hurdles over their amendment aimed at blocking vaccine mandates. Greg Valliere is Chief U.S. Policy Strategist at AGF Investments.
I think a precedent has been set, and that is every new legislative issue is going to have to be tied to vaccine mandates. A lot of Republicans will demand that they end, and that's going to complicate the story for the next 3 weeks.
Greg Valliere at AGF says the situation is further complicated by moderate Democrat Joe Manchin saying he's not enthused about vaccine mandates for businesses. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
And I thank you very much. Here's what's going on. We have got the Dow, the S&P, NASDAQ all declining. This update brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS. S&P down 65, now a drop of 1.4%. The Dow is down 255, down 0.7, while NASDAQ down 386 points. For NASDAQ, that's a drop of 2.5%. The NASDAQ 100 index down 2.4%. Russell 2000 down 2.5%. Stocks are extending their weekly slide as traders weigh that mixed jobs report against prospects for stimulus unwinding by the Federal Reserve. 10-year up 28.30 seconds. 10-year yield right now 1.34%. Gold up 0.8, 17.82 the ounce. And West Texas Intermediate crude oil down 0.6%, 66.09 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this week, we know, right, it's been all about the latest COVID variant. At least that's been one of our really main stories. It certainly has impacted financial markets. In this week's issue of Bloomberg Business Week magazine, Bloomberg's Cynthia Coons notes that whether or not it's a game changer, Omicron is COVID's future. And Tim, got to say, timely story considering what we've seen and the spread of the latest variant. I mean, we've heard from Anthony Fauci. We've heard from President Biden this week about it. We're going to hear from Dr. Anthony Fauci again a little bit later on.
Well, let's hear from Cynthia Coons, U.S. healthcare reporter at Bloomberg News. She joins us on the phone from New Jersey, as well as Joel Weber, editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. Joel, I want to toss it over to you because if there's one theme that Carol and I have experienced when speaking with doctors and experts throughout the week about the Omicron variant, it's wait and see. We just don't know yet. The data just aren't there.
Yeah, that's right. And I'll say that goes for our reporting as well, because all of our reporting is going to be based on this. So what we can do, though, is talk to as many people as we can in pharma and without about sort of what their approach is going to be. And that's sort of where Cynthia came in here is like, look, we've actually seen this game before. We've had multiple variants already, and to some extent, that is really going to inform how pharma approaches it and everyone else as well. But until we know a little bit more about this thing and the data, I think everything is a little premature. But Cynthia, based on what we do know, what can we expect?
So the great news is that pharma companies can move very quickly in actually assessing whether or not the vaccines that we have taken are going to be effective against Omicron, and that's partly because of the work they can do in the lab. They can actually take a look at how the variant performs against the vaccine in the lab, and that's data we could have soon. That data, they've said within weeks, and they've started that work right away. And the reason they were able to start that work right away is that they've done this fire drill with Beta, with the South Africa variant that was identified in South Africa prior to this one. They also did it with Delta, and they started making boosters that were targeted for those variants previously. And so those actual tailored vaccines are also partly how they know what to do in this instance. And actually, there are some overlaps between Omicron and Beta that allow Moderna, for example, are going to test their Beta targeted vaccine as well to see if it works against this mutation of the virus. But of course, the reason everyone's saying wait weeks if not longer, to see how this actually develops is that we've had scares before. And if you think back to Delta, I mean, Delta took over, but it didn't take over as quickly as we might be remembering it in retrospect. It actually became a variant of concern in India, and then it took over in India, and then it took over in the UK, and then it came here. So it could actually take some time, and it has to be a mutation that's strong enough to overtake Delta. And so we don't know any of that yet. So I think what a lot of people are trying to glean from a case here or a case there is very premature, because it's really a matter of seeing how it performs as a virus in a lot of people. And that's just going to take more time than I think, people don't want to wait. But unfortunately, that's why scientists keep saying you have to wait.
Well, Cynthia, I want to drill in on the idea that the large pharmaceutical companies, specifically Pfizer and Moderna, are working quickly to create vaccines or understand the effect that these are having on the vaccines that exist right now. How much of this is about the fact that these are mRNA platforms, not necessarily new technology, but new technology for vaccine delivery that we've seen really play out over the last year?
Yeah, that's the really cool part about having mRNA vaccines. They're able to sort of plug in the sequence once they have it. They don't have to grow the virus, which can take weeks or months. And so in order to actually make a tailor-made vaccine, it takes much less time. Production is much faster. They have facilities now ready all over the world. So if they're going to have to switch to a new version of the vaccine, they can do it in such a wide scale in much more quickly than if it was a traditional vaccine. Like flu vaccines can take 6 to 9 months to make, from identifying what strains of the flu you're going after to actually having a vaccine to put in somebody's arm. And this is just much faster than that. Pfizer has said 100 days. It's just remarkable how fast they'll be able to do this. But of course, it's a matter of not just making it, but also just knowing that you need it. And so, how do the industry make the pivot between, say, the vaccine we have now? Does a tailor-made vaccine become a booster? Does it replace the vaccine we have now? These are big questions that need to be answered if this is deemed a necessity. So we're still really far away from that. But I think the mutation alone highlights the fact that this is going in the direction of the sort of flu vaccine model, and we probably are going to need somewhat different vaccines on a regular basis if coronavirus is going to linger like this in the population.
Cynthia, I wonder, has everybody finally gotten the memo that, hey, folks, this was a really bad pandemic. We're probably going to get more, and we got to start preparing for things. So even if Omicron doesn't turn out to be, and you write about this in your story, doesn't turn out to be maybe as problematic, which fingers crossed, legs crossed, everything crossed, that it doesn't, we are developing methodologies, approaches, tools that will help us in the future, and that will be probably needed in the future.
I hope that's the case. I certainly anecdotally have heard there's a lot of demand for booster shots now, which is great because it's all we have. And boosting immunity to what's circulating in the community is still really important public health tool. But we still do have a substantial amount of vaccine hesitancy in this country. And I've heard from some experts that we really need to focus on those completely unvaccinated populations, because what we have seen from Omicron is that it can infect someone who's already had coronavirus. And we have parts of this country where vaccination rates are quite low, and Delta ripped through those populations, and those people might be more vulnerable to Omicron if that's how this plays out than, had they gotten a vaccine. And I think there is some perception in some parts of the population that having had COVID is how you build your immunity. And unfortunately, with this virus, that just turned out to be the case. So I think there are some encouraging signs, and the booster campaign hopefully will continue to gain steam. But I think really focusing as a public health community on that deeply entrenched unvaccinated population and trying to get to more people is really going to be the answer here.
Okay, so what about the global conundrum? Because worldwide, there are fewer people who have had access to mRNA vaccines than the other technologies. There's still just millions upon millions of people who just don't have the vaccine. As long as those people remain unvaccinated, we're going to continue to see mutations that, there'll be things long after Omicron, right?
And Cynthia, just quick, about 25 seconds.
Sure. I think one of the really encouraging things, though, that we don't talk enough about is that there are other vaccines coming down the pike that may not require the refrigeration of the mRNA vaccines. And that's really important to get a vaccine into parts of the world that may not have the facilities to store the mRNA vaccines. So I think we do need to keep an active eye on that. I do think there is a lot more vaccine coming, and we do need to support that as a global community. Right. The countries that can afford to donate need to donate more. And I think that's the only way we can get finish with this.
You hear it from leaders constantly. It's a global pandemic, folks, which needs global solutions and cooperation. Cynthia Kunz, you're amazing. U.S. healthcare reporter at Bloomberg News. On the phone from New Jersey, Jill Weber, have a great weekend. Editor of Bloomberg Business Week on the Access line from Brooklyn. Check out the magazine. It's all about the Bloomberg 50. That story, too, in the magazine.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 1 hour to go until the closing bell. The Dow, the S&P, NASDAQ bouncing along the bottom, right to the numbers, with the S&P down 73 on the sell-off Friday, down 1.6%, on track for a losing week. The Dow down 334, jobs Friday down 1%. We've got NASDAQ down 429 points right now for the NASDAQ Composite Index. That is a drop of 2.8%. The NASDAQ 100 Index down 2.7%. Russell 2000, broad-based selling, it is down now by 2.8%. Stocks are extending their weekly slide as traders weigh a mixed jobs report against prospects for stimulus unwinding by the Federal Reserve. Savita Subramanian is head of U.S. equity and quantitative strategy at BofA Securities.
You know, I don't want to sound too alarmist, and I think, you know, we're not looking for massive downside, big bear market, but I do think the probability of a 10% correction in the near term, or, you know, over the next 12 months is elevated. And our market forecast is flat. We're not looking for down market returns, but over the next 12 months, I think it's going to be a tough grind.
And again, we've got the S&P down now by 1.8%, NASDAQ down 2.9%. Apple shares slumping by 2.4% after a news report that iPhones of at least 9 State Department employees were hacked. Facebook parent Meta Platforms has fallen 20% from its September peak, heading toward a bear market. Right now, we do have Meta shares. They are trading lower by 2.4%. San Francisco-based DocuSign shares plunging after the e-signature company gave a revenue forecast for the current period that missed analyst estimates. And right now, we've got those shares down by 43%. Recapping 10-year yield 1.33%, S&P down 1.8%. And that's Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio, streaming on YouTube. We mentioned some of the COVID headlines earlier. We are going to be talking our David Weston with Dr. Anthony Fauci a little bit later on, so we'll get the latest on how he sees the Omicron variant. In the meantime, South Africa's daily number of confirmed COVID-19 cases almost quadrupling since Tuesday as that variant spreads across the country. And I think, Tim, I don't know if this is the latest, but this is the latest, I think, according to our measurement, at least 6 U.S. states have Omicron cases.
Yeah, but I think it's safe to say, given what we know about this virus, that it's likely in other states as well. Carol, let's get into it with Dr. Ian Lustbader. He's clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from New York. Dr. Lustbader, how are you?
Hey, happy Friday, guys. Nothing to panic about. Do not overreact to this, please.
Please go on. Why?
So, in my opinion, I think people are really overreacting to the news on Omicron. In my opinion, this is not going to have any material effect on the stock market, the economy, or life in the United States unless we overreact with, lockdowns and travel bans and so forth, all of which really have been proven not effective. Omicron really is behaving like many viruses. Most or many respiratory viruses evolve over time to become more contagious and really less lethal, less virulent. And they adapt that way to outcompete. And to me, it certainly looks like Omicron is going to outcompete Delta, both in people who've either been vaccinated or have had Delta or who have had vaccines, and certainly in the unvaccinated. It's a very efficient virus. The incubation period is longer. It's about a 10-day incubation period. It's more contagious and less lethal, which is really how viruses evolve. And overall, there are many people who feel this is actually good news because it probably will end the pandemic a little bit sooner, since I think it's going to outrun any of the vaccines that we're going to be able to either develop or try to distribute to the rest of the world. That's my take on it.
Hey, listen, Dr. Lustbader, when you say it'll probably end the pandemic sooner because it'll create much more of a global immunity, is that what you're saying?
Yes, I think more people, this is highly contagious. I think it's, as Tim says, it's probably in many places. We have not really been testing for it. We don't, especially in the United States. We do testing COVID swabs, but that doesn't routinely distinguish between any of the variants. So for all we know, there are many places now that we're going to test for it that has it, but it doesn't really change the way you manage it. If anything, it seems like the disease is more mild. And this is really how viruses mutate. They don't want to kill the host because then they die off. Now, there are some, potential risks, meaning obviously there are a lot of mutations, more contagious. Could this be more like a common cold now where you get reinfection and kind of a seasonal variation and that it doesn't really go away? That is a possibility.
So how should... You're saying don't panic. You say it's likely that it could overwhelm the world. It'll spread quickly. Should we've talked to you for we've talked to you for longer than I've worked here. Okay, that's what I'll say. and I'm wondering,
as
Dr.
long as the
Lustbader,
pandemic has been around, probably even longer.
Yeah, even longer. And I'm wondering, Dr. Lustbader, if we should change our behavior in any way versus how we were behaving, let's say, 10 days ago before this entered our lexicon.
So I don't think so. I think prudence is always good. We certainly know to some degree many respiratory infections are improved with masks. They're not 100%. It's certainly somewhat helpful. Don't push the envelope in very crowded areas. But I think based on the way Delta behaved and the way this is going to behave, I think everyone sooner or later is going to be coming down with Omicron. The good news is it's going to be, for most people, very mild. It's not going to be lethal. It doesn't seem to be killing more people or hospitalizing more people or raising the death rate. How that will ultimately spill out when the rest of the world begins to get it is unclear. My sense is, like the common cold virus, the rhinoviruses, people get rhinoviruses and common cold viruses probably several times a year. That may be what happens with this, but it is not going to affect our life any more than getting a cold would be, and you don't go into the office if you're coughing or sneezing. You don't want to infect other people. So I don't think it should affect us in any way more than that.
Does that mean we're out of the woods of the possibility of a variant that is more virulent and also really contagious?
Well, this has over 30 mutations and probably arose in someone who is immunocompromised, who didn't really mount a good immune response. Could theoretically another variant occur? I think it's possible. This one seems pretty efficient, spreads easily, doesn't kill the host. Most people don't know they have it. It's really almost a very mild, cough or tickle in the back of your throat. It does cause some fatigue, so people after they're infected often are somewhat fatigued. So I don't think we're going to get a son of Omicron variant, but I do think this is going to spread around the world, and I think the worst thing to do would be to panic or overreact when there's really no change that we need to do in a meaningful way.
Dr. Lustbader, what changes your mind?
I think if we get more data that this is, again, changing or killing more people or hospitalizing more people, okay, that's a problem. I think by the time we get a vaccine, and it is reasonable to develop a vaccine, that's going to be a couple of months. I think we're going to be so far behind the spread that it's not going to be meaningful. We do need to work on vaccines, both for influenza, right? We do a yearly influenza trying to catch up with the old one. There can be universal vaccines that focus not on the spike protein, which mutates all the time. We saw 30 mutations here just in the receptor binding area of the spike, but in other areas of the virus that don't mutate as much, that antibodies to that might be more effective in eliminating this on a more permanent basis. We still don't have a universal flu shot. You take one flu shot, you're good for the rest of your life. We do a yearly flu shot. We may need something like that for COVID unless we develop a more universal antibodies to a different part of it.
All right, got to run. Hey, have a good weekend. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. Just want to mention a headline, the 10-year yield dropping 11 basis points to 1.335%. Wow. That's a significant move to the downside. All right, let's get to world and national news.
Nancy Lyons is standing by in the 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. America's employers slowed the pace of their hiring in November, but President Biden is focusing on the positive, calling the decline in the unemployment rate to 4.2% incredible news. He also lauded the creation of 6 million jobs and increased wages since he's taken office. Bloomberg's Irv Chapman with more.
Despite the broad economic recovery, the president conceded that Americans remain anxious about COVID and about rising prices.
I want you to know I hear you. It's not enough to know that we're making progress. Every day, my team and I are working to deliver consistent, determined, focused action to overcome the challenges we still face.
The president, nursing a cold he said he got from his infant grandchild, noted television scenes of empty store shelves after chief executives assured him the shelves should be full, and he urged reporters to go look again. In Washington, Irv Chapman, Bloomberg Radio.
President Biden today also signed into law the stopgap spending bill that will keep the federal government running through February 18th. The head of the CDC, Rochelle Walensky, says the federal agency is moving aggressively to identify and respond to cases of the COVID Omicron variant in the U.S.
Our CDC laboratories are working in collaboration with public health and academic partners and across agencies to understand the science of this new variant, assessing its susceptibility to therapeutics and vaccines.
Dr. Walensky says the CDC is equipped and prepared to fight the variant head on. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic in our Interactive Brokers studio here in New York City. Interesting story. We talked about big tech with our TV team. We're going to talk a little bit more about the markets when we go beyond the bell in just about 50 minutes' time. Meantime, we've talked a lot about the big tech names, and in particular, amazing what Meta, formerly known as Facebook, the performer known as the artist formerly known as Facebook, significant move.
Yeah, this is so interesting because this kind of coincides, at least over the similar period of time, with Facebook's name change to Meta Platforms Incorporated. It's the
Do you think
Facebook.
It's connected? Do you think there's a correlation?
I don't know.
Okay.
I want to talk to someone about this.
Okay.
The shares are set to enter a bear market after months of volatility triggered by a whistleblower's revelations and disappointing quarterly results. The sell-off is more than 20% since its closing record on September 7th, Carol, erasing about $230 billion in market value.
Yeah, that's a pretty big move. And, you know, if you're a technician, you're checking it out and trying to get an idea of specifically what this means in particular. Meta shares, we know, have been hurt in recent months by negative comments after their business model from whistleblower Frances Haugen, according to David Traynor, who covers Meta for investment research firm New Constructs. She appeared before the House Subcommittee, you know that, on technology earlier this week after accusing the social media giant of putting profit over safety of its users in October. I think about the conversation we just had with Greg Farrell, right?
Yeah.
Of talking about the
Enron.
20-year anniversary of Enron, and what's changed is whistleblowers, they come out. I mean, they get recognized, they benefit potentially financially as well for coming out, but they come out and tell us about what ails us. And they're protected.
He even
from doing
cited
so.
Frances Haugen as an example. She appeared on 60 Minutes, for example.
Yeah, exactly. I mean, Meta shares just alone this week, we've seen them pulling back in a big way. Let me just pull up the chart on the Bloomberg. It's down about 6.3% so far, but we have seen a significant move more generally, as we said, close to that bear market.
Yeah, I do want to point out that the concerns also about the impact of Apple's data collection rules and supply chain challenges that contributed to the decline and spurred Meta's biggest drop in nearly a year in October.
All right, good to know. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We're looking at a down day for the Dow, the S&P, NASDAQ as we bounce along the bottom. S&P at the lowest since October 18th. A lot going on today. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are sinking again today, helped by worries about the Omicron variant. Dow was up 161 points, is now down 300. S&P's dropped 74. NASDAQ is lower by 420. The U.S. 10-year yield sinks to 1.34%. Gold is up 16. Bitcoin plunges 5.3%. And among the main 11 S&P sectors, only consumer staples and utilities were in the green. And leaders to the upside in the Dow, Walgreens and Walmart, while Boeing, Microsoft, and J.P. Morgan led to the downside. Regarding the virus, the WHO says the Omicron variant has now been detected in 38 countries, while South Africa's COVID-19 daily cases have almost quadrupled in the past 4 days. After earnings, DocuSign plunged 43%. And in other news, China is set to create a new state-owned rare earths giant. Wrapping things up, Ford has nearly 200,000 retail reservations for the F-150 electric truck. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg, type squawk on your terminal SQUAWK. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I just want to clarify something. We were just talking about what's going on with Facebook parent Meta platforms. We are seeing it under pressure once again today. And the stock, it is down about 20% from its September 7th high. And just wanted to clarify what we're seeing this week. It's down about 8.6%. I kind of messed up because I put Meta in, and I'm like, no, that's not the ticker ever, and it's not the ticker. They haven't changed their new to their new ticker yet.
And the new ticker was supposed to happen on December 1st.
Right.
MRVS, I believe, right?
MVRS. But it's not going to be Meta by it.
It's not going to be Meta, that's right.
But nonetheless, the stock pretty much in a bear market. All right.
It is time now for our weekly crypto update. It's brought to you by Interactive Brokers Global Analyst. Global Analyst helps you find new global investment opportunities to diversify your portfolio and discover undervalued companies. Try Global Analyst today at ibkr.com/GA.
All right, let's get to it with crypto content creator, crypto investor himself, Ben Armstrong. He's founder of BitBoy Crypto and the YouTube channel that goes by the same name, a self-proclaimed crypto millionaire, because you've got to show me that you are a crypto millionaire. He joins us on the phone in Atlanta. Ben, just having some fun. Good to have you here with Tim and myself. How are you?
Yeah, doing great today, despite the market drop today. But yeah, doing great. Glad to talk to you.
Well, let's talk about what you have been doing in this world that you have developed. Your BitBoy Crypto YouTube channel. Tell us what it tells us more broadly about crypto investing, who's getting into it, and the interest that is out there.
Yeah, so we have the largest crypto community in all the interwebs, as we like to say. We've got almost 6 million total followers between YouTube, Twitter, TikTok, Instagram, a few other social channels. And what we see is we view ourselves as the mainstream channel. We're the bridge to get people into crypto. So a lot of times people will come to my community and come and watch our educational videos, our daily live streams, our topical videos. And they'll get real excited, and they may decide they want to delve a little deeper into maybe trading or deeper into NFTs or deeper into other spaces. And then sometimes they'll go to other channels. But most of the people that are coming into crypto today, at least with YouTube and other social medias, they're kind of using us to get there. So we're very proud of that. We've got very beginner-friendly content. And, I think what we're seeing now when it comes to the people who are getting into crypto is there hasn't been a huge bump in retail interest here in the last few months. So, we're continuing to see a lot of the same people in the space that have been in it for a while.
Why do you think there hasn't been a huge bump in retail interest?
Well, because when you look at the price, when you go back to September, kind of like you were talking about with Facebook a little while ago, September, started off a pretty good time in October. We've really kind of evened off since then. And so a lot of people who came in early last year, they're in big profit, and they've been here for a while, and they'll continue to be in big profit. But for those people who have came in more recent times, their profit with Bitcoin is either non-existent or it's very small, depending on when they got in. So, I think people aren't necessarily looking at Bitcoin as the thing to really pull people into the markets. We've seen NFTs and metaverse talk, obviously, over the last few weeks really continue to heat up. The NFT market is down a little bit, but the metaverse stuff has really been, pulling some retail people in. But to the average retail investor right now, like Bitcoin just doesn't seem like a giant opportunity.
What about other cryptocurrencies? I mean, what can you tell from what's going on in the conversations or the interest or what people are searching on and what they want to know about interest in other digital currencies?
Right. So obviously, anytime there are projects that continue to move upwards when the market is stagnant, people become interested in those. Like I mentioned, metaverse projects, Decentraland, Sandbox, those are two that people have really been looking at. But we go with just some of the more traditional projects that have been around for a while. I mean, Ethereum right now is starting to generate a lot of interest again. We're looking, one chart I like to look at is the Ethereum versus Bitcoin pair. And this is the value of one Ethereum coin versus the value of one Bitcoin. And we finally have seen that break into a really large uptrend, and a lot of analysts are predicting it to go parabolic, where one Ethereum will be over 10% the value of one Bitcoin. And we're at a place right now where the Ethereum market dominance is rising and the Bitcoin market dominance is falling. It's kind of a recipe where we could, in the next few months, see Ethereum at least temporarily pass Bitcoin. And I think that's something that's super exciting to people. Of course, I'm talking about the market cap.
Yeah, not the price. The
Right.
prices, they're quite different right now. But speaking of price, Bitcoin price right now, Ben, is really cratering today. It's down more than 6.5%. At $53,000. What do you make of the volatility that we've seen and how it could potentially scare away people who haven't yet invested?
Yeah, so the volatility is something very terrifying to people. And that's why I've really been talking a lot at different, speaking engagements that I've had and talking with different people that, there are people that are going to be risk adverse. They're going to be scared away from Bitcoin because of volatility. You can't really talk someone in to being risky. So those people that are risk adverse, they're going to look at the volatility of Bitcoin and they're going to be scared, and they're not going to come into this market for a long time until it stabilizes maybe 15 years from now. So the people that are in crypto today and have reaped all the benefits, they've got a little bit of that risk factor, a little bit of that risk gene in them. So you're never going to talk somebody into being risky, in my opinion. Especially investors or savvy investors, they've already got a plan. They're going to stick with what works. That's why the newer generation is coming into crypto a little more because, when you're younger, you're a little riskier than, as you get a little bit older. So that's one thing we're seeing. But what's really interesting to me about the Bitcoin price that we've been noticing over the last, week or so is that it really has been following the stock market a pretty good bit. And so today we get the jobs report. Bitcoin had actually recovered overnight and was going back up. I think it was above $58,000 or very close. And then the job report came out and Bitcoin shot back down because the traditional markets also felt the impact from that jobs report. So I think that that's something we could continue to see for a little bit. But ultimately, I do believe that December will be a big month for Bitcoin in spite of this, drop that we've had today.
Okay, we'll talk about that a little more in just a second. But is a drop like today's, where we see Bitcoin at around 53,200, is that an entry point for you? Is that a buying opportunity?
Well, the $53,000 level has been extremely strong, and it has bounced off of that several times. Right now, it is hovering right at that number almost exactly. But I do think it is a pretty good price point to get in at. We've seen the $52,000 to $54,000 range be very strong for Bitcoin. And I don't think there's, especially with the options, the futures expiring this morning, I think that's, on Deribit, which is the world's biggest, Bitcoin futures and Ethereum futures exchange, I think that frees up a little bit for us to possibly get some upward movement over the weekend. I definitely think it's possible. So, it's definitely interesting times for Bitcoin, but $53,000 continues to be a good price point.
Well, it's interesting, too, and I was just looking. Bitcoin's off about 21% from its November 9th high. Ethereum off about 13% from that moment as well. S&P hit a high back on November 18th, and it's only down a few percentage points, I think, from that. Forgive me, I was just looking, down about 4%. So we definitely have seen the cryptocurrency world take it more on a chin.
Who should be investing in cryptocurrencies in your view?
Yeah, so here at BitBoy Crypto, our mission is to empower people to find financial freedom through crypto assets. So if you're someone who is looking to change your life financially, crypto has shown over and over and over again that over the long term, not over 1 month, not over 2 months, you can find financial freedom through crypto assets. So if you're someone who's already found financial freedom, you know, if you're Jeff Bezos and you made all your money the old way, then why would you switch? Why would you come over? But if you're someone that is looking to change your investment strategy, looking to change your life, looking to get out of that 9-to-5 rat race, crypto offers that. The numbers on it are very clear. While we get caught up in the short-term moves of these assets, over the long term, they've continued to crush it, continue to set new all-time highs. Almost every project, you know, in the top 100 has set new all-time highs or is very close to new all-time highs this year. So because of that, you know, there are a lot of statistics that point to if you stay in crypto for 4 years or more, you will make money in this space. You will do very well. I always say, you know, it's very easy to make money in crypto. It's very hard to make money in crypto day to day.
I'm just going to say, Ben, there's some regulators who might say differently, and that you've got to understand, too, that there's a lot of risk, and not all cryptocurrencies are the same. Ben, come back. We would love to continue in the future. Ben Armstrong, founder of BitBoy Crypto, joining us on the phone in Atlanta.
All right, well, let's get a check of what is going on with the trading day. Here's Charlie Pellet.
Hi, thank you very much. We're looking at a down Friday here. We're also looking at a losing week. We begin with Bitcoin down now by 6.4%, 53,214 right now on Bitcoin. The Dow, the S&P, NASDAQ are all slumping. Stocks extending their weekly slide as traders weigh a mixed jobs report against prospects for stimulus unwinding by the Federal Reserve. S&P down 56, down 1.2%. The Dow down 177, down 0.5. NASDAQ down 368, a drop right now of 2.4%. 10-year up 27.30 seconds, 10-year yield 1.35%. Spot gold up 0.9%, 17.84 the ounce. West Texas Intermediate crude down 0.7, 66.04 a barrel. Briefly, Swiss drug maker Roche Holding has developed PCR tests that can single out infections with the Omicron variant of COVID-19, which would help countries monitor the spread of the new strain. S&P again down 60, a drop of 1.3%, and that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with a Bloomberg Business News Flash. Well, one of the voices we go to when we have questions about the COVID virus is Dr. Anthony Fauci. He's catching up with David Weston.
Bloomberg television and radio audiences worldwide. I'm David Weston, and we're delighted to be joined once again right now by Dr. Anthony Fauci, Director of the National Institute of Allergy and Infectious Diseases and Chief Medical Advisor to President Biden. So I have to thank you on behalf of us all, Dr. Fauci, for coming on so often to explain what's going on, because we need to know. But let's start with Omicron. We spent the week basically trying to sort out things we don't know about. You are talking, I'm sure, every day to experts in South Africa. What did you hear today from South Africa about what's going on?
Well, they're getting more and more information in two fronts. One is what the profile of people who are getting infected. In other words, we're trying to find out if there's any degree or not of protection, whether or not you're unvaccinated versus vaccinated versus having been previously infected. So that's going to be very relevant, because the ultimate question that's going to be important for us here in the United States is, if you have been vaccinated and boosted, given the mutations that this new variant has, what is the chance of protection against infection, and if not infection, against severe disease leading to hospitalization? So we're learning about the severity of the infection and the profile of the people who are getting infected. As you well know, we are starting to see cases literally, you know, every few hours to a day or two in the United States. And as we approach the weekend, we're going to probably see more and more, because once it is here, there's no way that you're not going to see more and more cases. The real question is, in the fact that we have a background of Delta variant, which is very dominant and has essentially pushed all the other variants off the board, where is Omicron going to be in relationship to Delta? Will it take off and become the dominant variant? Or will it essentially get a bit smothered by Delta the way all the other variants? The only way we're going to know that is to wait and see. And that's exactly what we're doing. But we are getting important information from our colleagues in South Africa. I have a Zoom call with them tomorrow morning. So we should get another update in the morning.
So let me ask one question specifically about South Africa, because there's some information coming out of South Africa that the number of cases is going up, which is not a surprise. The number of hospitalizations, I believe, is not going up certainly as dramatically. Should we read anything into that, or is it possible that's just a matter of a delay, a lag, as it were?
I think the latter. In order to get a feel for the relationship between infection, a high degree of symptomatology, hospitalization, and ultimately death, you've got to have a lot of patients get infected, and you've got to follow them for at least several weeks. So although it is encouraging that they're not seeing any concerning signal, like all of a sudden a lot more hospitalizations, that is comforting, but it isn't definitive. We really need to wait until a lot more people are recognized and identified who get infected to be able to make any determination about the degree of severity.
Dr. Fauci, if we go all the way back to Monday, a whole 5 days ago now, when we saw you with President Biden, what do we know differently from what we knew then about this Omicron?
Well, we know that it's here in the United States, which I actually, wasn't anything brilliant on my part, but we predicted that when you see it spreading throughout countries in Europe and Asia, obviously you're going to see it here in the United States. The real big question that we don't know now is what I mentioned just a moment ago, is how is it going to fare in a world, and the world being our country, in a world in which Delta is the dominant variant? That's going to be a very interesting situation to watch.
All the way back on Monday, you said, as you suggest, it's going to come to the United States. You were right. Let me ask you a different question. Community spread. Is it inevitable at this point? Do we already have community spread in this country? Because that may affect questions of travel restrictions, right?
We absolutely have community spread in this country. We have community spread with the New York, Minnesota case, where someone was in Minnesota, went to a conference in New York, got infected, and people with whom he had contact with also got infected. We don't know how many of them, but there's no doubt that there's community spread.
So, Dr. Fauci, what is the timeline on finding out the clinical effects of this? Because when we talked to people on Monday, they said about a month we should have a better sense of the clinical effect, how severe it is, how contagious it is.
Rufo, you let us know when you're ready.
Is that still holding? Because I saw some reports that maybe it's going to take longer.
No, I think you're going to get an inkling of it within a period of 3 weeks to a month.
3, 2,
and you're going to get
1.
a very good determination.
We'll talk about the impact of
but you can sort of get a hint.
We'll get the latest on the Omicron variant and the impact on global travel with Trivago CEO Axel Heifer.
Talk about
crypto is entering
because we have a couple of treatments, one from Merck, one from Pfizer, that once somebody, as I understand, has the disease in the early stage, at least you could take a pill, as it were. When will we have approvals, do you expect, of those therapeutics?
Well, the FDA has given an emergency use authorization to the oral medication from Merck, the molnupiravir. The Pfizer one is being submitted for consideration for an emergency use authorization. It's going to be a combination of getting authorized, but also making enough product to have an impact. And that's the other important issue, is what is the scalability of these medications?
And a further question is, what is their likely efficacy with respect to Omicron? I talked to Dr. Albert Bourla earlier in the week. You know him well. And he said he thought because of the mechanism, it involves proteases, I understand, they use in the Pfizer, that he was reasonably confident it would be effective against Omicron. Does that make sense?
Yes, what Albert says does make sense, because if you look at where the mutations and the amino acid substitutions are located on the spike protein, particularly around the receptor binding domain and other parts of the spike protein, it does not have an impact, at least from a molecular standpoint, on the protease enzyme of this particular virus. So if you want to use a protease inhibitor, at least from a molecular mutational standpoint, it looks like that part of the molecule was spared. So you never know until you test it. But I think what Albert Bourla was saying does have some merit.
So, Dr. Fauci, let's turn now to what our possible defenses are here. You said getting vaccinated, getting boosted is number one defense, but obviously testing and sort of having intelligence, as it were, about where this disease is terribly helpful. We heard just today, actually, that President Biden was tested, I guess, 3 times for COVID because he had what he called a frog in his throat. What are we doing on testing, and are these rapid tests really that accurate?
Well, the rapid tests are fundamentally antigen tests. They are not as sensitive as the PCR test. But if you do them frequently enough, the lack of sensitivity or relative sensitivity is really overcome by the fact that you ultimately will get it being make a diagnosis if you test enough, more than just once. And that's the reason why when you talk about doing it, you want to do it, not only maybe a couple of days in a row, but a day, every other day, something like that. But they are very, very useful because even though they aren't as distinctly sensitive as the PCR, their ready availability, their ability to quickly get an answer and to do it very often because of the quantity of them, that makes up for the relative lack of sensitivity.
I'm sure no test is 100% effective. There's always some margin for error, if I can put it that way, in a test. If you can compare PCR on the one hand with the antigen on the other, what is the difference? What's the degree of difference in the two? And is there a bias toward false positive or false negative?
When you have a less sensitive test, the likelihood of there being a false negative is there, much more so than PCR. PCR is highly sensitive. Sometimes that sensitivity can give you a false positive, but most of the time the sensitivity and the specificity are very good for the PCR. The rapidity with which you could do the antigen is a great advantage, but because it is not as sensitive, you could get what was called a false negative. Namely, it's there, but it's in low enough concentration that the antigen test does not pick it up. That would be considered a false negative.
Dr. Fauci, you have said repeatedly the best defense is to get vaccinated, and if you've been vaccinated, then get boosters. But let's talk about a segment of the population that cannot get vaccinated right now, and that is the under 5, because I'm hearing from a lot of parents, I suspect you are as well, a real eagerness to have that possibility. Where are we?
Well, we've done the tests. They're in the process of testing kids from 5 to 2 years old and from 6 months up to 2 years. Those tests are ongoing right now. We likely will get an answer in the sense of getting enough data to evaluate it by the first quarter of 2022. When the FDA approves that, I can't say because I don't want to get ahead of the FDA. But when you're dealing with children that young, there's always an extra degree of care and sensitivity to the vulnerability of children. So we'll have enough data by the beginning of the year. I can't guarantee you when an emergency use authorization will be given.
Dr. Fauci, we heard President Biden earlier this week say he does not have any prospects right now of shutting down the country entirely or in parts. We've seen that in parts of, for example, Germany recently and in Austria before that. Is that for medical and public health reasons, or is that political? I mean, do you still have the same tools in your toolkit today that you did a year ago? Because even if you ordered a shutdown, are you confident people would comply with it?
Well, we have a lot more tools in our toolkit today than we had a year ago, that's for sure, the most important of which was a vaccine. So, I mean, that goes without saying. No, I agree with the president that I don't see anything right now that would imminently demand a lockdown of the country. We have to see what goes on with Omicron, but we also need to do a bit better with Delta. I would like to see a large proportion of that 60 million people, adults, who are eligible for vaccination who have not yet gotten vaccinated. That, I think, is a very important issue that we need to address.
And we see events, even here in New York City, we had this anime convention that appears to be the source of one case of Omicron. Have we gotten a little bit jaded? Have we gotten a little bit lax with respect to some of these events that could be super spreaders, not containing them sufficiently?
Well, I don't know what the circumstances of that event was. I understood that you had to be proof of vaccinated to get into that. Yeah, but I don't know. I don't know enough about it really to comment on it.
Okay, Dr. Fauci, from your point of view, besides vaccination, besides boosters, what should we be doing to keep ourselves safer?
I think just be prudent in our activities. I think the most important for first of all, for an unvaccinated person, please get vaccinated. For a vaccinated person, when your time comes up, please get a boost. A boost dramatically increases the level of protection. For a vaccinated, boosted person and everybody else, when you are in an indoor congregate setting, keep your mask on because you do not know what the status of vaccination and or infection is for those who are in that congregate setting with you. That is being prudent. Be careful when you travel. Wear your mask indoors. Try and best as possible to stay away from very crowded, poorly ventilated places. Those are just common sense things that you could do.
Last question, Dr. Fauci. Very timely and very specific. Certainly here in New York City, I suspect elsewhere. Should we be canceling our Christmas parties? Because there are various reports right now of holiday parties being canceled.
Well, it really depends on the circumstance. If you're in a situation where you have people that you know are vaccinated, you could make vaccination or proof of vaccination a condition of going to the party. I don't think you can say blanket that you should cancel Christmas parties. I wouldn't say that at all.
Okay, well, that's encouraging. Thank you. I really mean it. You've been so good at coming on and really explaining to us what we need to know. Thank you to Dr. Anthony Fauci. He's director of the National Institute of Allergy and Infectious Diseases. Now back to you.
All right, you've been listening, of course, to David Weston live on Bloomberg Radio, Bloomberg TV, talking with the nation's top infectious disease doctor, Dr. Anthony Fauci. I think one of the key things is he said, listen, we're getting more about the profile of who's getting infected, the profile of Omicron patients. The ultimate question for us in the U.S., he said, if you've been vaccinated and boosted, what's your protection against severe disease and infection? And that, Tim, we know, will take a few days or maybe a few weeks to really understand it fully.
Yeah, Dr. Fauci and his team have been in touch with South Africa. He said that he's having a meeting with colleagues in South Africa tomorrow morning on Zoom, so he'll get an update there. Fauci also says that we absolutely have community spread when it comes to Omicron. Probably not that surprising, Carol, if you've been paying attention for the last 18 months with what has been happening with viruses and variants. But just because we have cases in 6 states right now doesn't mean we're not going to find them in others.
And just a heads up, listen to Bloomberg. Check out Bloomberg.com throughout the weekend because we're going to have updates. Dr. Fauci is saying he's going to get another update tomorrow morning, Saturday morning. He's going to get important information from South Africa, specifically where this variant was first identified. He says there's a meeting set with South African officials tomorrow, so we'll look for certainly some more news out of him. In the meantime, we got to do the chart of the day.
Joining us is Kriti Gupta. She's markets correspondent for Bloomberg News. Kriti, what is your chart of the day?
What is my chart of the day? Well, it's all about payrolls, right? Because I prepped this chart this morning.
Wait,
and we have to talk
why?
Payrolls. I know, right? But I should have done it on the tech sell-off. But the payrolls number is still so important because
absolutely,
obviously, we're waiting for this labor market. We're waiting to see what this means for markets in particular. But for me, what I like to look at is, I'm going to nerd out, but don't worry, I'll explain it.
We like nerds.
I was looking at the correlation, essentially the dynamic between the City Economic Surprise Index, which measures whether or not there has been a data disappointment or a data positive, and how the stock market reacts to it. So for the majority of the pandemic, that correlation has been negative, which means that if there is a positive payrolls number, you get a negative market reaction, which is kind of counterintuitive, right? Because that's supposed to be a good thing. The market's supposed to be rallying on that because it means economic growth is underway. It means the economy is growing. It means people are working and therefore spending. But it's been the opposite during the pandemic because, after all, the Federal Reserve has been giving so much support to the markets. So the idea here was that if there is good data, what if the Federal Reserve pulls some of that support? That relationship, like I said, has been negative. But in the last couple of months, it turned positive, where people are starting to think, hold on a second, inflation is
Good
actually...
economy. Oh,
right.
Or what? Yeah.
Well, inflation is a bigger problem, and we actually
okay.
need the economy. We need them to keep spending. We need them to continue to get jobs and et cetera. And so today, essentially this morning was, do we or do we not get a positive reaction off these payrolls? And then we saw the disappointment, and the initial reaction was what it used to be, which was payrolls went up, the market, or payrolls went down, the market went up.
Right, payrolls missed. It was a
Right.
surprise to the downside.
Right, and now you're seeing the market sell off completely. So the question is good news or bad news bad news?
I don't know. Carol knows.
question.
Carol knows. I'm
Well,
calling on Carol.
That 10-year note and the move that we've seen, down to 135. I think we're even down below that a little bit more. 133.5, I think was how far we went down. There's a lot of conversations out there that, okay, we know the economy is doing well right now. Look at that ISM services number. That was pretty cool and pretty strong. What happens when we get into the new year? What if the Fed starts to ease back? What if we start to get higher rates? What if the economy slows down? We expect China to slow down.
Yeah.
What happens then?
Yeah, well, that's the question, and that's the problem, because the assumption here 4 months ago, when this correlation really turned positive, the assumption here was that the Federal Reserve would continue to target inflation, and that this was something that the markets actively wanted. So for a little while, you actually saw the markets react positively to that, and now they're having a tiny, tiny tantrum about losing that federal support, which it looks like they will after Chairman Powell's comments earlier this week.
It's interesting, though. I mean, we've had significant moves down, though, right? When it comes to rates,
we have. But you know what's interesting is that it may not necessarily be related to the data. It basically, Federal Reserve trumps economic data.
Okay, good to know. All right, Kriti Gupta, have a great weekend. Kriti Gupta with her chart of the day.
Well, we are just under 11 minutes away from the close of trading. Let's get to Charlie Pellet for an update.
Hi, thank you very much, Tim. Right now, looking at stocks that are close to or at session lows. As you mentioned, 12 minutes to go before that bell clangs on Wall Street. Stocks are extending their weekly slide. Traders are weighing a mixed jobs report against prospects for stimulus unwinding by the Federal Reserve. Treasuries are rallying. Let's begin there. We've got the 10-year up 26.30 seconds. 10-year yield on this Friday now, 1.35%. The Dow, the S&P, NASDAQ all lower. Tech shares being knocked down. Let's begin with NASDAQ down 420 right now, lower by 2.7%. The NASDAQ 100 index down 2.6%. S&P tumbling 71, down 1.5%. Dow Industrials down 262, a drop there of 0.8%. Again, that 10-year worth repeating 1.35%. Spot gold up 0.9%, 17.84 the ounce. We were talking about Bitcoin earlier in the program, down now by 6.6%. Bitcoin 51,159 right now, and crude retreating by 0.8%, 65.99 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, let's bring in Abigail Doolittle and get a check of what is going on this trading day. Abigail, we were talking, by the way, when you came in, you made this sort of joke that, volatility certainly gives us something to talk about, but that certainly seems to be the name of the game with what we've seen, especially in recent days when we've seen outsized moves to the upside and the downside in the S&P 500.
Yeah, this action is really wild. You were asking, what should we talk about? What couldn't we talk about? Because everything is going on. I mean, this week it started off with Powell Pivot 2.0, and then the new variant, economic data, the jobs data today, which looks a little bit
confusing,
weird.
right?
Yeah, confusing because of the headline number and then below it. But to the point of volatility, volatility does breed volatility. And into this week, we had a couple of weeks of intraday volatility where the close wasn't that dramatic, but in between there were moves. That typically results in the sort of volatility we're seeing today. So one way to measure that is the VVIX. That's the VIX of the VIX. That's been steadily climbing into this week. And lo and behold, now we have the VIX at its highest level since January as investors are looking to hedge.
So, trying to make some sense out of this, because I feel like we're starting to see creep into the market about whether or not we might see a monetary policy misstep. And I think we're just at this quandary about what the data means. Does it make sense, though, that we saw investors moving into treasuries and we saw the equity market selling off? Because sometimes the correlation can be a little bit confusing on that part.
So I have a different take on what's happening today.
Oh,
so
okay.
I'm going to enter something new into the conversation here, and that is China tech, because Didi is plunging.
We actually talked about that
yes.
earlier.
So I think that's the real driver here. So you can talk about...
So you think that's the driver with the tech sell-off?
Yeah, I think that's the driver for today. This risk-off mood. So you have all these different factors going on. At the end of the day, it's always going to be the Fed. But in terms of the degree of the risk-off sell-off today, yes, I think it's China Tech, because Didi, when they first announced that they were going to be delisted, no surprise, the stock had gone up, Hong Kong listing. Then by the open, that was in the pre-market, by the open, the stock is plunging, it's weighing on Alibaba, Baidu, all these big tech companies that have huge weightings to the NASDAQ 100, and then weighing on U.S. tech. So early on the open, stocks were green. But as China Tech fell, it bled into the tech. You have a messy jobs report, all of the volatility going on around these different factors. And I really think that's the real culprit.
That's so interesting. What about, because part of the narrative early this morning was, okay, DocuSign is plunging today. It had bad earnings.
DocuSign. I don't even know what the market cap is, but let me take a look. Let's see what the market cap.
Well, it's 40% less than it was last night.
Good point. But even with that, so all right, it's actually a little bit bigger than I thought. It's a $26.5 billion company.
Look at Adobe.
So it's not
and
tiny.
Adobe's taking a hit too, which is a huge company, and that's taking a hit as a result of DocuSign. But I'm wondering if it says something different about the way that investors perhaps are thinking about high-flying tech companies that are perhaps overvalued, and is DocuSign a sign of
Maybe,
that?
but I would think that DocuSign is more of a healthy sign in terms of the actual real world, because if the pandemic, if it's going to turn into the epidemic that people have talked about, something that we just have to live with.
It would be flying off the charts.
Yeah.
Although Tim and I were saying we're going to use it no matter. We're going to ask to use it.
These things make life easier.
I want to go back to China because I've been watching the NASDAQ Golden Dragon China Index, which is off 43% this year. And
it's unbelievable.
We actually talked about it yesterday because you are seeing an increasing number of headlines when it comes to Chinese stocks in particular and the U.S.-China tensions. And you've got the SEC, right, getting ready to move closer to, we know, right, delist these Chinese firms. And you do wonder about what that means, those tensions, and what does it mean to not have that component in our markets?
Well, it creates a huge tension in terms of the unknown factor around Beijing, because it makes these companies, some are saying, uninvestable. We talk about the ultimate risk for a company, a publicly traded company, is a going concern risk that they're going to go bankrupt. In this case, it's not a bankruptcy fear, but it is a going concern fear. Didi, was a company that you could invest in here in the U.S., and it IPO'd, I believe, at 14. Now it's been halved by these concerns, and so that's the case for all of these companies. Is Beijing going to rein back in?
Right.
How do you value that?
To some extent, they become state-controlled entities, right?
Yes, exactly. And how do you value that? It's very difficult. So I think that you're seeing folks sell the baby with the bathwater. These are great companies, most likely. I mean, they are great companies.
How big are they, though, as a component of the overall market?
Huge. That's the thing. So
the U.S. market?
Yes. So I'm going to pull up Alibaba right now in terms of, so the Alibaba it has a market cap. Okay, so relative to our Apples, it's not as big, but it's $304 billion market cap, and it is down on the year 50%. So it had been almost $1 trillion company at the beginning of the year, and it's been halved, not because of the business, but because of that going concern risk. So, and to have the world's largest economy, the U.S., the S&P 500 or the NASDAQ 100, trade in such a divergent way from the Chinese equity markets, typically with time they're going to come together because the global economy is so connected. So we've been watching this all year with this China Tech going down, NASDAQ going higher. At some point, they're going to come together. It could happen one of ways where U.S. meets China, China goes up, or in the middle. So it's an interesting thing.
Well, Carol's eager to. It's my turn, Carol. Okay, I know. Like we got a couple minutes left. Okay,
I love when she comes in.
It's awesome when Abigail Doolittle is here. Hey, Abigail, talk a little bit about what's going on when it comes to sort of looking in hindsight about the volatility we saw earlier this week. Because if today's all about China, then what was earlier this week all about?
Well, that's the real volatility, actually. That's the Fed. So this China stuff, I would say, it's very, very serious. I would rate it above right now, at least. Well, I would say I would put. The Fed's always going to take the cake because that's monetary policy. That's the flow of money, central banks, and if they potentially are going to taper and then hike in a way that had not been foreseen, to some extent they leave bond traders stranded, and then especially as folks are maybe worried about this variant, that would not seem to be the time for them to necessarily be backing off the accommodation, but people not knowing what it could mean for inflation. But that's the real cause of the volatility. But in terms of today's selling and that NASDAQ Golden Dragon ETF or index, index, it's down 9.2%. I think that's the worst day since 2008. That's huge.
It's huge. It's huge, and you can't negate it. I just think about the recalibration that's going through our financial markets on so many levels, whether it's China and Chinese companies, the U.S.-China relationship, when it's the energy markets in terms of us moving around. It just feels like, or if we start to see a slowdown in the economy, I mean, the economy looks really good, barring this mixed jobs report. There were strong parts to it. What if we are slowing down next year? So what does that mean?
I don't think that there are too many signs. That's a great question. I don't think that there are too many signs that we are slowing down. I mean, this jobs report is great. That household number is so strong. Some people aren't able to explain it, but nonetheless, it seems as though
you don't think the flattening of the curve could be a sign?
Well, that's the one thing I was going to say.
We could see a recession.
It's interesting that you're saying that. So I was just talking about this with somebody who is very knowledgeable, and he was making the point that the way that the Fed is buying the longer end of the curve and selling the middle, that it's going to invert the yield curve, and an inverted yield curve would mean a recession. However, in terms of the data that we're seeing right now, it's, I mean, that ISM services, it's at a record high. It's at like 69.
Can I remind you the economy fell off a cliff when we had a pandemic? No, I'm just kidding.
Yes. So
that was an
if you were there.
Hopefully that's not going to be the winter of 2022. We were just talking about how some colleagues of ours yesterday, we were talking about how we were hoping 2021 was going to be better than 2020, but 2021's been pretty tough. Hopefully 2022 is going to be better.
We keep like crossing our fingers and hoping it's going to get better.
Yes.
We get a run. I know I dominated her, but I love her. Abigail, have a great weekend. Bloomberg Markets reporter Abigail Doolittle. All right, folks, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell, Carol Massar and Tim Stenovic with our global simulcast, bringing together our Bloomberg television, radio, and YouTube audiences on a wild and what some people, Carol, say is a wacky week here. Seeing a little bit of a bid come in here as we get towards the closing bells, but nevertheless, the damage is done.
Wacky go on the terminal. And you're going to find a lot of reasons why. Certainly we had Jay Powell in his testimony, concerns about the Omicron variant. We're watching what's going on with Chinese tech companies in particular. The NASDAQ Dragon Index down 9.3%. It's down 42% for the year, Tim. I mean, take your pick. There's lots of things to worry about.
Yeah, don't forget about cryptocurrency. The Bloomberg Galaxy Crypto Index down 6.6% right now. Bitcoin down close to 6%. Interestingly enough, over the last few days, we're seeing more of a correlation between stocks and crypto.
But you're not really seeing the traditional correlation that we've really seen in the past in this pandemic, Carol, Caroline, I should say, of technology and bond yields. Because sort of a broad-based sell-off as we're really going into that safe haven trade. But it is technology that isn't really participating the way it historically has been.
Yeah, what happened to the haven of Apple? What happened to the haven of big tech? It's not playing to the tune today, and that has more to do with the Fed, perhaps, rather than the stay-at-home or not trend.
Well, there's a lot of concerns about the economy here. I think one interesting move that we're actually seeing, particularly late in the session here, is the Dow Transports pushing back into the green here as we get to the close. They've actually were more resilient on this day, and even though we saw the tech falling and we saw a lot of other areas falling today, the transports had actually held their own for a good portion of the day, and now it looks like they're going to finish in the green.
Notable standout. And actually, we've come off our lows.
Yeah, down here now, Dow Transport's not on your screen there, but up about 0.1%. Let's walk you through the major indices here. You're looking at a Dow Jones Industrial Average right now. Looks like it's going to close down on the day by 6 or 3 points, or about 0.2%. And of course, that's going to be down on a weekly basis as well. The S&P 500 down about 0.8%, or 38 points here on the day. 39, we can call it, down about 1% or so on a weekly basis. The Nasdaq Composite down about 2% on the day and 3% on the week. And let's take a quick look here at the Russell 2000, because this was the real underperformer here, down 2%. This is a third 2% decline on the week for the Russell 2000. So we did see a lot of folks kind of go out of some of those small cap cyclical names.
And as uncomfortable as it felt in today's session, let me throw out one more metric. We still had 197 names in the S&P 500, gaining ground, 306 lower, 2 unchanged. So nonetheless, we continue to see some gains, Taylor, in the market despite the overall downward trend.
Yeah, and you actually saw that a little bit too on a sector level as well. For our radio audiences, we do the sector winners, the sector losers. Now, there's 4 sectors that are in the red that are still the gainers of the day. But overall, it's a pretty sort of defensive move, if you will, right? Food and beverage, household products, food and staples, utilities. That's either a defensive play or very correlated to some of the bond yields falling. Those are some of the big outperformers. You're up 0.5 to about 1.5 of 1%. Down to the downside, you're also getting some of the dividends, some of the banks, some of the financials. Those are the companies that don't do well when bond yields are falling. Semiconductor, software, and auto. That's also the technology play that we've been talking about. Clearly here to the downside, in many cases, 2, 3, 7%. Not really seeing technology today as that safe haven bid, Carol.
And we should just point out real quick, Carol, your NASDAQ Golden Dragon Index down 9% on the day.
Right, really, really significant, if you will. So we continue to see that really sell off when it comes to those Chinese stocks.
All right, let's get gainers. You got gainers?
Yes, I'm going to get to gainers, sorry. Marvel Technology, not home to the Avengers. We're talking about Marvel Technology atop your NASDAQ 100 list, up about 17.7%, up as much as 24% at its highs today, settling back, but still with a pretty significant gain. Jumping after fourth quarter outlook, beating estimates to draw that news alone, draw upgrades from Cowen and Goldman Sachs and price target boosts across Wall Street. Cowen alone calling the results a watershed moment for a silicon powerhouse. So take that. Yeah. Walgreens Boots Alliance, also one of the gainers, up 4.3%, pretty much closing at its highs of the days, top of the NASDAQ 100 and S&P 500. Sky News coming out and saying that the pharmacy company is exploring a sale of its UK Boots chain, lining up Goldman Sachs, exploring options. Walgreens has really been looking into some other options to expand into businesses as it sees some more pressure on some of its traditional businesses.
This is interesting, too, because, you think about, they didn't absorb that. That was, less than 10 years ago. They kind of finally absorbed that. I guess, with Roz Brewer at the helm, maybe looking for a little bit of a different direction.
Exactly. And just quickly, Krispy Kreme donut, DNUT is your ticker. We talked ring dings yesterday. We're going to talk donuts today. Krispy Kreme, top in the Russell 2000. Love looking at those small caps. Major stakeholder, JAB Holdings. Yeah. They own about 44.8%.
Can you still get a free donut every day if you've been vaccinated with Krispy Kreme?
Do you?
Oh, maybe they were doing that. Maybe they should do something for boosters, though.
I love when sugar and health collide.
Anyway, JAB, big shareholder, they're going to say, they're going to stay in that company for years to come. Maybe they just want those glazed donuts.
All right, no donuts for DocuSign today. The company finishing the day down more than 42%. We were talking about this one all day, guys. Third quarter billings and its revenue forecast for the current period missed analyst estimates. At least 4 firms that are tracked by Bloomberg downgraded the stock, saying it will take time to get sales growth back. Dan Ives at Wedbush called it a, quote, debacle quarter, cutting the price target from $340 to $200. JP Morgan, Piper Sandler, and Needham also cut their price targets. Let's talk Apple. Caroline, you mentioned Apple finishing the down by more than 1.1%. Shares fell after Reuters first reported that spyware from Israel's NSO group was used to hack the mobile phones of at least 9 employees at the U.S. State Department, but still bouncing off those session highs earlier in the day. And DD Global, wow, finishing the day down by more than 22% after the company said it plans to withdraw from U.S. stock exchanges. As a result of DD's move, we saw ADRs of other Chinese companies like Alibaba.
I love this story, too. Do you know that their lockup from that listing hasn't actually happened yet? Oh. That's on December 22nd. This could be the fastest turnaround from listing to delisting that I can remember.
Wasn't it the day after they listed that you suddenly started to see the company have to backtrack?
Well, yeah, because China came out and pretty much made it known that it wasn't happy. That we got those reports out. And keep in mind, these shares haven't been anywhere near $14 basically since that second day of trading.
Yeah, $6.07 a share, finishing down more than 22%.
I mean, who next? That's a key question when you look at DD. In terms of what else is lower, look, my friends, at a column on terms of foreign currencies. For our radio audience, it is everything in the red, generally, from G10 perspective, unless it's a haven. So Aussie dollar off by more than 1.3%. We're seeing the Swedish krona off by 1.2%. The New Zealand dollar off by more than a percentage point. Where does the money flow? It goes into the Japanese yen. It goes into the Swiss franc. It goes tentatively into the US dollar, but it goes into havens. And what also money comes out of, we see overall money coming out for a 6th straight week of oil. Managed to see a little bit of growth just on the last day of trade, Brent crude up 0.4%. However, it is a down week overall for oil, the longest losing streak on a weekly basis since we've seen due to 2018. This is a growth story. This is a worry about, of course, the variant and what that means in terms of your desire to be needing oil, needing to grow the economy. Steel gets a little bit of a bid today. That's as we start to see the reshuffling of how much production we'll see out of China. But lastly, I look at sovereign bonds, and what a day for bonds. Money moving into Canadian 30-year by some 7 basis points. The UK gilt, the 10-year coming down as well. There was a search for safety amid the weekend throughout the world, Taylor.
It is unbelievable, you guys. And we talk about rate of change, the moves that we have seen in the last week alone, whether it's yield up or yield down, is pretty incredible. Today, of course, the story is bond price higher, yield lower. I give a big shout out, as we did earlier, you guys, on TV about Ian Leon, who'd really called from BMO Capital Markets. 125 to 135 was his target on the 10-year. He puts out a note and says it has been reached. Very interestingly as well, the 30-year, we're at a 168, says that these bond prices are going to go a little bit higher before we start to get lower.
How fast
and
does this
yields
snap back? I feel like we've been all over the place, though, with these yields.
Today did feel different, though, and I know that we've been all over the board in the 150 range, but to drop to a 135, to get a yield curve that's the flattest we've seen now since November of 2020, that's pretty incredible.
And yet real yields on your 10-year still at 1.1 with a negative sign in front of it. Explain that.
Massive liquidity sloshing around in the system is the short answer.
Isn't that the big story, though, that flattening of the yield curve? And what does it say? I mean, we got the ISM services report. That was a really strong report. How do you justify the 10-year going to 1.335?
When you have sales next week, Carol, as well, when you have got a huge amount of supply coming, you talk about awash with cash, Taylor, but there's going to be a need for cash next week when we have that amount of bond sales coming through the door.
And we've seen time and time again that every time we say that this is the week where those sales finally catch up with the Treasury, and then people come in and they buy.
Look, I want to end just by talking about the big miss that we got with the headline number on the jobs report earlier today. I talked to Neela Richardson, chief economist at ADP, and she says this is a kind of a puzzling report because when she talks to companies, they are saying they're having so much trouble hiring. It's just that people are not yet coming off the sidelines. It's showing that the pandemic, the virus, is still continuing to scare people. How do you get those people off the sidelines?
Well, but I mean, didn't we see some of those people come off the sidelines, at least in the household survey?
We did, and there was a big difference between the establishment survey and the household survey.
And is there a structural shift? Are they coming back?
Yeah.
I don't know. That's the question.
This is called distortion.
All I know is I've already bought my tickets and for front row seats for the December 15th FOMC meeting because I really want to see how the Fed explains all of this.
There's no audience section there. They keep the doors closed.
I have a private box. Would you like to?
Do you pay in crypto?
Exactly. All right, guys. What a week. So fun to walk it through with all of you. Have a great week.
It was nice seeing you guys again. Part 2 here.
Twice in one day. Oh, my God. All right. That's going to do it for our market wrap, our Beyond the Bell cross-platform coverage on radio, TV, and YouTube. Folks, have a good weekend to everybody on our TV side. We're going to see you, though, same time, same place on Monday. And we're not
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's look at the scorecard for the week. Let's do it.
Because my mouth's wide open.
The
Because
Dow
I just think about
0.9%.
where we've gone.
The S&P down 1.2. The NASDAQ finishing the week lower by 2.6%.
The VIX up about 2 points this week overall. All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says health officials are keeping an eye on the emerging Omicron variant in the U.S. and moving aggressively to deal with it.
In the United States of America, we're doing everything that needs to be done to take care of the American people within our borders.
Biden also addressed today's jobs report that showed gains of 210,000, less than anticipated. He focused on the unemployment rate that dropped from 4.6% to 4.2%. Well, following the shooting at a Michigan high school this week, prosecutors say they've charged the parents of the suspect, James and Jennifer Crumbly, with involuntary manslaughter. Oakland County prosecutor Karen McDonald says the weapon used was purchased just days before Ethan Crumbly carried out the attack.
James Crumbly purchased a Sig Sauer 9mm model SP 2022 from Acme Shooting Goods in Oxford, Michigan on November 26, 2021. A store employee confirms that Ethan Crumbly was present with James at the time of the purchase.
McDonald says the gun was stored unlocked in the parents' bedroom. The local sheriff now says the parents have gone missing, and it's possible they are armed. 15-year-old Ethan Crumbly faces 24 charges, including 1 count of terrorism and 4 counts of first-degree murder. Spyware from Israel's NSO group has reportedly been used to hack the mobile phones of a number of U.S. State Department employees. That's according to two people familiar with the attack. They say the hacks targeted officials based in Uganda or focused on issues concerning the East African country and took place in the last several months. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So we wanted to bring you this story because it was definitely on Tim and my radar. And this actually was among our most read stories on the Bloomberg for the full day here this Friday. Berkshire Hathaway, you think of Warren Buffett. Yep, got it. But you also, of course, think of his longtime buddy and friend and partner, Charlie Munger, who told a conference today that markets are wildly overvalued in places and that the current environment, quote, is even crazier, that's the quote, than the dot-com boom of the late 1990s that subsequently led to a bust.
Okay, here's what he said. He's 97 years old, remember, so he has seen a lot of cycles when it comes to markets.
Along with Warren Buffett.
Oh, absolutely. I consider this, quote, I consider this an era even crazier than the dot-com era. He said at the Sohn conference in Sydney. It's according to the Australian Financial Review. Munger also said that he wished cryptocurrencies didn't exist and praised China for taking action to ban their use. That's according to the AFR.
Gosh, isn't that interesting?
Yeah.
I wish they'd never been invented.
It's so interesting.
Go ahead.
Well, I was going to say, I think that there's the conversation that happens on, FinTwit, financial Twitter, a lot right now is the difference in attitudes that people have toward investing. And I think a lot of people who are heavily involved in crypto would say, of course, that perfectly makes sense for somebody like Charlie Munger and his investing style to say that he wished crypto didn't exist.
Well, and some would say, okay, here's a couple of the arguments. First of all, these are guys who long-term have done very, very well, focusing on value, not necessarily sexy companies, but certainly have a very, very long track record. At the same time, for a long time, they stayed away from tech. Right? And at some point, they ultimately got into it. So you do wonder, in hindsight, at some point, might they think differently? And I think we're just in this environment. Look, we had two guests today. We have Charlie Munger saying this, and then we had a guest earlier, Ben Armstrong, who's like, this is a great way to become financially independent.
I have a hard time seeing Munger and Buffett saying, we wish this existed to go in and investing in them, right?
Okay.
I don't know. It's different than tech.
I agree. But it's just some perspective about kind of how, they've got other people making some decisions too.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A wild week is behind us, a down Friday and a losing week for the S&P 500 index. For the week, the S&P was down 1.2%. NASDAQ this week dropped 2.6%. This week, the Dow was down by 0.9%. It was a week marked by big swings in financial markets, a sharp sell-off in huge tech companies today, with the NASDAQ Composite Index down 295 points, down 1.9%. S&P down 38, drop of 0.8%. The Dow down 59, a drop there of 0.2%. 10-year up 27.30 seconds, 10-year yield 1.35%. Gold up 0.9%, 17.84 the ounce, while West Texas Intermediate crude is at 66.48 a barrel, down by 2 cents. One of the day's biggest decliners, DocuSign, after earnings, DocuSign plunging today by 42.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, 12 days of Christmas, not 12 days until Christmas, but 12 days of Christmas. Tim, what will it cost us this year? I'm guessing it, just like everything else, it's going to be a bit more this year.
It depends on the price of turtle doves and golden rings.
Hey, this stuff can be expensive.
I know.
All right, so let's get to it. We do this every year. It's a fun look at the holidays, and I always look forward to it. Amanda Gotti is Chief Investment Officer at PNC Asset Management Group. She's with us on the phone from Philadelphia on the 2021 PNC Christmas Price Index. Hey, Amanda, so good to have you here with us. Just remind our audience what this index is all about. I mean, it's pretty self-explanatory, but go ahead.
It is. Good afternoon. Thanks so much for having me. I'm always delighted to be with you all. The 12 Days of Christmas, the traditional holiday song, is really the basket of goods and services that we use to price for our annual Christmas price index. It's literally that simple. We add up the cost for 1 partridge in a pear tree, 2 turtle doves, and so on as the song goes.
Okay, well, this year it's going to cost you tens of thousands of dollars. $41,205.58.
That's correct. To buy all 12 days worth of True Love's gifts, that's about what it's going to cost. It's about 5.7% in terms of an increase relative to 2019 levels. We're comparing versus 2019 because such an unprecedented year in 2020. We actually had to remove a number of big components of the index, and so we thought a better comparison was really to compare versus 2019. If you really want to make an impression, though, out there and buy all 364 gifts, that's repeating all the verses of the song, you're really going to have to shell out a lot. It's a little over $179,000 this year.
All right. So what? We've got inflation at this point already at a 30-year high in the U.S., could approach 7% soon. That's based on a Bloomberg story. So we're just a little bit below inflation, right, in terms of the increase from 2019 to 2021?
A little bit below, but pretty darn close. I think it's a very special basket of goods and services. So sometimes we can glean insights relative to what's happening in the broader economy, but this is a pretty unique basket. So not surprised at all to see the prices up, but it is a little bit more nuanced than what we're seeing in the broader economy.
Well, here's what's so interesting, because you do have 6 geese a laying, and Carol's like trying to keep a straight face and not laugh right into the microphone as I'm saying that and not singing it. But that's higher this year by 57.1% versus last year. But then it's really interesting because you have things like, 9 Ladies Dancing, the price remaining the same. And the point that you're trying to make is that live performances were out of the 2020 Christmas price index because of the pandemic, but the price hasn't actually changed since 2019. Is that supply or is that demand when it comes to live performances?
There's a number of things going in there. So last year we had to take this unprecedented step of taking all of the live performances out of the index, and so the index fell 59%. And so this year, thankfully, with the progress around the reopening, bringing live performances back, we were able to incorporate them into the index. I think a number of theater companies and dance companies, while certainly wanting to make up for lost time, also don't want to push their audiences away by jacking prices up really significantly. And so it is a bit of a fine balance, and it is a little bit nuanced here. And so while the ladies dancing didn't move all that much in terms of pricing, we did see some movement in terms of the lords and in terms of the pipers and the drummers. And so, again, you really have to look under the hood to see what each variable is doing.
What's the biggest one? Is it the geese laying?
The biggest move is actually the 6 geese laying, but I would say the largest increases by far are really what we consider to be the exotic pet category. All of
That
the birds
is,
are up
well,
pretty-
I'm just going to tell you, that is my favorite thing said all year, but go ahead.
Well, I'm glad to be
Thank you.
Holding that award there for you. Really, when it comes down to it, at least when it comes to the birds, we're seeing higher food prices, certainly higher labor and wage-related prices. Those both apply more broadly across the economy, and so that is driving up the increased cost of raising the birds. But I would also say, so that's a supply side thing, but on the demand side, we're actually seeing pretty significant demand there. Accelerating trends continuing around backyard farming, believe it or not, and even farm to table. So in the bird category, they're really getting it from both sides of the equation.
You say exotic pet, and I think Joe Exotic.
Hold on, I'm a little confused. Which animals on this list are pets versus which animals on this list are for eating?
I think to each his own.
Okay.
Make sure that they are like,
I was thinking about
they're
it all
not listening.
from the pet perspective, so I was a little surprised.
Oh my God, you are wrapping up what has been a crazy week for us in like the perfect way. Hey, one thing I thought was interesting though, gold rings, right? Not too bad.
Not too bad. I never miss an opportunity to talk about my all-time favorite gift, so I'm glad you teed that up nicely there. They're also a big mover, but on a relative basis, not nearly as much as what the bird categories are seeing there. Gold rings are up about 8.5%. Versus 2019 levels, and that's largely in line with the trends we're seeing in gold commodity prices. And I would just say there, with the uncertainty still kind of swirling around in the backdrop, the pandemic lingering, investors have dashed for more store value oriented types of assets and investments, and so the gold rings are certainly reflective of that trend.
I have this image of an Amazon distribution warehouse with the geese over here, the turtle doves over here, the French hens over here.
I don't think you can find this stuff on Amazon.
Hey, you can find anything on Amazon. Amanda, have a wonderful holiday season. We loved having you here. Amanda Gotti, Chief Investment Officer at PNC Asset Management Group, on the phone in Philadelphia.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. So we talked about the 12 days of Christmas, what it costs.
We talked about Lamborghinis, what they cost.
And now we're going to talk about super yachts and what's going on there.
All
of this can be under the Christmas tree.
I was going to say, all of these things are on your holiday list.
Or cannot be under the Christmas tree. All right, we're going to check in with the founder and CEO of Yatco. We'll get to Stephen Myers in just a moment.
In the meantime, a check of how that trading day wrapped up and all the business news. Here's Charlie Pellet.
Rough sailing on Wall Street today. Choppy waters for the Dow, the S&P, and NASDAQ. We had the S&P dropping 38 points, down 0.8%. Traders naturally have had a lot to digest this past few days, from Fed Chair Jay Powell's hawkish tilt to uncertainty about how the Omicron coronavirus outbreak could affect the global reopening. Today, the S&P, as I mentioned, down 0.8. The Dow dropped 59 points, down 0.2%. The real weakness, though, had a lot to do with technology. NASDAQ dropping 295 points, down 2%. The NASDAQ 100 index down 1.7%. 10-year up 26.30 seconds. 10-year yield 1.35%. Spot gold up 0.9%, 17.84 the ounce. West Texas Intermediate crude 66.46 for a barrel of WTI. Well, as for Omicron and what it potentially means for the economic outlook, Veronica Clark is an economist with Citigroup Global Markets.
There's still a lot that we don't know about the virus itself, but I think what we've learned through each wave of COVID is just that the economy is more and more resilient to each wave. If we are, seeing something like the Delta wave that we saw in August, September, that was a situation where demand held up very well, but maybe the supply side was hit more. If we have global delivery delays, shortages again, that's an inflationary scenario.
Walgreens Boots Alliance is exploring a sale of UK drugstore chain Boots so it can focus on its North American business. This, according to a source, it would undo billionaire Stefano Pessina's 2014 blockbuster transatlantic merger. Today, on a down day for the rest of the market, we saw Walgreens Boots Alliance up by 4.3%. Recapping stocks lower, S&P tumbled 38 points today, down 0.8%. NASDAQ down 1.9% for the week. The S&P was down 1.2%. And that's a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thanks so much. Well, last month, Bloomberg was out with a story. It was pretty cool about how the billionaire economy, well, cool if you're a billionaire, how the billionaire economy is booming with demand for super yachts, mansions, and planes soaring, driven by cheap debt and rising wealth. The number of super yachts sold this year alone, this is at least through mid-October, increased by about 60% to 523 from the same period last year. This is according to some research from Super Yacht Times. More than a quarter of those purchases were for new vessels. How about that, Tim?
Well, people who have the money want to be able to afford, or want to be able to go and yacht in luxury.
Yeah, no doubt about it. Well, Stephen Myers knows about what's going on. He's the founder and CEO of the multiple listings service provider Yatco. He joins us on the phone in Miami. Hey, Stephen, so delighted to have you here with Tim and myself on Bloomberg Business Week on Bloomberg Radio. How are you?
Thank you very much for having me. Yeah, I'm doing great. I'm actually literally sitting by the dock of the bay in Miami Beach for Art Basel and surrounded by the Sunset Harbor Marina and a lovely sunny afternoon.
Art Basel is really cool. It's a perfect place to sell you super yachts. I'm just going to put that out there.
Nice. It's sunny. It's already dark here in New York.
So listen, I'm a sailor. I've talked with a lot of brokers in the industry over the past year. They have been super, super duper busy during the pandemic. What have you been seeing specifically?
Yeah, I've been in the industry for over 30 years, and we've never seen anything like it. It's far surpasses 2007 and the boom there. And, it's a very cyclical industry. However, it's been very solid, and, the trends have just been upwards. The challenge that we now face is inventory. The pre-owned inventory dried up after 2020. There was a rush on pre-owned inventory in 2020 during COVID. Obviously, people wanted to isolate themselves and lock down themselves on, there's no better place to be than on a boat or a yacht.
Especially during a pandemic, I'm just going to point out, but go ahead.
Absolutely. And that trend is going to continue. The new boat sector in 2021 has absolutely been on fire, as well as the luxury yacht charter business as well. That's now out, pretty much sold out through 2022 and continuing on.
What are you seeing from boat makers about how they're able to meet demand or how wait times have changed due to this unprecedented demand?
Yeah, well, I think there's a trend more towards, less customization, more production, obviously, because it's a faster production time. But certainly the custom projects are continuing, and as we get into the $500 million plus yacht market that's coming, that's certainly a long lead time. But right now, most of the semi-custom custom builders are looking at sold out for the next 5 years until they find additional capacity.
Well, it really talks about the wealth creation, certainly, too, within our world. What about, Stephen, in terms of their access to the supplies? I mean, a beautiful boat, you're talking about teak, you're talking about great woods, you're talking about a lot of stuff. It's also the bigger you get, it's basically a floating city. Are you guys able to, are the builders able to get everything that they need?
Yeah, it's a challenge, but I think that the industry is able to meet those challenges. Because we're not looking at the volumes of the housing market and so on and so forth. So it's a challenge, but I think that the industry, it's not holding things back to the extent of other industries.
What about when it comes to resales?
The problem there is lack of inventory. Now people are willing to sell, but if somebody was willing to sell for $12 million, a year ago, now it might be $14 million. So we've actually seen 59 on our yachtco.com MLS database. We've actually seen 59 price increases just in the past month, which is unheard of. Normally, a price increase in yachting is an anomaly, and it usually doesn't send a good signal to the market. But for the first time in my career, we're seeing an extraordinary number of price increases on a regular basis.
All right, sit tight for a second, Stephen. We just got to do a little bit of news, but we'll come back and continue the conversation. Stephen Myers, sitting on the dock of the bay.
Yeah, but still sunny in Florida, by the way.
Not here. Founder and CEO of Yachtco, as we said, joining us on the phone in Miami. We'll continue talking about this market, but it is interesting, and it does speak to, especially when you get into these multi-million-dollar, hundreds of millions of dollars, massive yachts. It does speak to some of the wealthier members of our community. Not my community.
Not necessarily mine. I want to talk about the cruise and how difficult it is to find crews right now, because having one of these boats is one thing, but you got to have a crew to sail it.
Below deck Mediterranean, below deck sailing yachts, they have no problem finding crews. I'm just going to say, I do watch that reality show. All right, we're going to get back to him in just a moment. Let's get back, though, to Nancy Lyons. She's in D.C. with a check on world and national news. Hey, Nance.
Thanks, Carol. The number of states where the Omicron virus has been detected keeps growing, and the nation's top infectious disease expert, Dr. Anthony Fauci, tells Bloomberg, we absolutely have community spread. But he says it's too soon to know how severe the Omicron variant really is.
We really need to wait until a lot more people are recognized and identified who get infected to be able to make any determination about the degree of severity.
Fauci says he'll learn more tomorrow after receiving an update with South African officials where the variant was first detected. U.S. Secretary of Labor Marty Walsh tells Bloomberg he feels good about where the U.S. economy is headed, despite job growth slowing its smallest gain of the year with 210,000 jobs added last month. He says the workplace is undergoing a transformation.
I think that the pandemic has changed the way, or at least had conversations about the way the office looks, people working teleworking. We've seen 30%, I think last month, if I get the number correctly, 30% increase in entrepreneurship in this country.
Secretary Walsh says one plus is that the unemployment rate has fallen more than expected from 4.6% to 4.2%. The parents of the accused gunman in this week's Michigan school shooting face charges of involuntary manslaughter. The local prosecutor says they were the ones who bought their son a gun days before the attack. She says the parents then failed to secure it in the home, leaving it in an unlocked drawer of their bedroom. Ethan Crumbley is charged with 4 counts of murder and various other charges. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Our guest for this last half hour of Bloomberg Business Week, Stephen Myers, founder and CEO of Yotco, still with us on the phone in Miami. And Stephen, we're just going to talk for a couple minutes and we'll do some more news and come back in a moment. Tim's really curious about what, Tim?
Yeah, well, how do you find people to work on these boats right now? Because we see a labor shortage happening in many different industries. But if you are one of those people who's lucky enough to get your hands on one of these yachts, how hard is it to get a crew?
Yeah, I mean the availability is there. You know, the usual channel is to go through a professional crew agency. There's a good pipeline, and you know the real thing, I guess, the big difference in the yachting industry is that what's I think also attracting a lot of people to their boats and to purchase and charter is the fact of a secure environment where you can control the environment of the people that you're in. There's defined boundaries, and making sure that everybody is vaccinated on board, et cetera. So we're seeing people with spouses that aren't even so interested in the boating program that suddenly are now spending the majority of their time on board, and spending less and less time at home and more time on board, and often going to further and further remote locations like the Antarctica and Norway, for example, just far-reaching places. But the crew are there, so we're not seeing a major problem in that respect.
Yeah, my next life, I think I just want to be a crew member of a gorgeous yacht and just kind of sail the world. Stephen, hey, sit tight for a second. I know you're there in Miami. We're going to do a little bit of news and we'll come back and talk some more. We are talking with Stephen Myers. He's the founder and CEO of Yotco, with us on the phone in Miami. Just a reminder in terms of how we closed the market, settling on this Friday down just about 59 points. S&P 500, a decline of 38. The NASDAQ, though, taking the biggest hit on a percentage basis, down almost 2%, down 295 points. We'll continue talking super yachts right here on Bloomberg Radio. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stock slump after the jobs report. A sharp sell-off in huge technology companies dragged down stocks today, with the S&P tumbling 38 points, down 0.8%. The Dow was down 59, down 0.2%. NASDAQ down 295, down by 1.9%. 10-year up 27 seconds. 10-year yield 1.35%. Spot gold up 1% today, 17.84 the ounce. West Texas Intermediate crude was down 0.2%, 66.37 a barrel. So a down day with the Dow, the S&P, and NASDAQ all slumping today. S&P down 0.8%. Russell 2000 down 2.1%. NASDAQ 100 index down 1.7%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Still with us is Stephen Myers, founder and CEO of Yatco, still with us on the phone in Miami. All right, Stephen, I've been on your website checking out.
He wants to buy a boat.
No. I'm good. I'm actually really good right now.
She's more of the sailing type.
I am. And I was just looking at some of your different boats. You guys, though, actually do have a fair amount of boats listed.
Yes. However, that inventory is definitely down worldwide. At any given time, we typically have over 10,000 central exclusive listings for sale. And at the moment, we're, probably seeing a 40% decrease in actual volume of availability of yachts for sale. So it is significantly down. But I think within the next 12 months, we'll start to see more, inventory increasing as the new boat availability comes back available and starts cycling again.
I'm looking at this old Chris Craft, man. That is just gorgeous. 1930 Chris Craft, 48, an old Woody. I'm curious who's buying.
Well, we're seeing actually a big increase of new 20 to 30-year-olds coming into the market from tech and crypto and blockchain. And so we're seeing that. A lot of them are starting off with chartering. In fact, we're seeing that. And in fact, I was going to say that I actually, I have a boat here that was in Miami about 7 years ago. And there was a very famous founder of a tech company that I was seeing the roster of the people that chartered, my boat, and it was somebody very famous, but which usually in our industry we kind of try to always respect confidentiality. So I won't mention the name, but it was a household name, and I was very surprised.
Rhymes with? No, I'm just kidding.
And anyway, I'm sure he's on to much bigger, better things than my day boat, but it was nice to see. The emergence of a new market that's coming into the industry.
Well, let's talk price range here in terms of the most expensive boats that you have available on Yatco, and also what we perhaps consider entry level. What's the range?
Well, I mean, entry level can be, we have boats that are tenders to yachts, et cetera. So, you could be looking at anything as small as a $10,000 tender, all the way up to, we're getting close to the, going over the $500 million range. But, at any given time, for sure, there's $250 million to $350 million vessels for sale. And I wouldn't be surprised if we don't see, within this decade, the first $1 billion yacht. I think more particularly as the world is changing with COVID and this, ongoing pandemic, I think, we're definitely seeing people spend more and more time on board, and I think that's going to continue. The most billionaires, their yacht is worth more than their home, and I think that trend's going to continue. And they're seeing more and more value by being on board, enjoying life. I think one of the biggest things that came out of the pandemic was people kind of took a breather and said, you know what, like, life is short, and I better get the most of it now, and get the most out of it now. And so I think people are spending more time, quality time with family and friends, and on board, and exploring the world.
Geographically, what are you seeing in terms of buying trends?
One interesting thing about Europe is it's turning very green. We're seeing, a lot of pressure on builders to go green, lower emissions, hybrid technology with, and recycled materials. So we're definitely seeing the trend, and also pressure on marinas for more green, more green services. So hopefully that trend will continue worldwide. But it's starting aggressively in Europe, and I think it's about to expand. I know at Yachtco we're about to take some initiatives to to push the green trend. We've been running a series on women in yachting, and our next series will move towards green trends in yachting.
It's interesting because I was thinking about, we had an earlier conversation with Stefan Winkelmann, who is the CEO of Lamborghini. And, they're moving towards electrification and they talked about kind of just pressures between, it's where the world is going. And there's also pressures among your consumers as well. It's a few years before they're all in on electrification, but that's interesting that you said that. And if anybody sees the environment, is anybody who's out on the water. You really see the impact.
Absolutely, and I think the yachtsmen and yachtswomen, but it's a long-standing term. It's a long-standing term, and I think it's inclusive of yachtsmen and women. But I think that yachtsmen and yachtswomen are definitely seeing. They appreciate the water and the environment as much, if not more, than anyone. And I'm very impressed with the direction that the industry is going, and we're certainly Yachtco going to take our role and try to lead, and lead the way and bring more and more people on board with going green and being more environmentally aware and conscious and helping.
Stephen, when we were speaking earlier, you mentioned that this is a cyclical industry and you haven't seen activity since 2007, or did you say it exceeded 2007?
It's exceeded by far, has surpassed 2007. So quote after quote is, from industry veterans who I've known for over 30 years. I've never seen anything like this. It's on fire.
Well, so what derails this? What stops this from continuing?
I don't see it slowing down anytime soon. The frenzy pace will slow down. But, we've seen, even since the 2008, in the upper end of the market, we've seen growth continue. That trend will continue. You're with a lot of these yachts, you're looking at 5-year build times. And so, the course is plotting forward. You're seeing, an increase of high net worth around the world, and more and more accessibility to yachting in markets like China and Russia and around the world. So you're seeing a growth throughout the world, and I think that the trend is going to continue to expand.
Well, this has been a lot of fun and really a wonderful way to end up what's been a bit of a nutty week. So, Stephen, thank you so much.
I wish I could send you a photo from where I'm sitting right now.
No, we wish we could actually be sitting with you.
Yeah.
Photo's not going to do us any
Well, come on down to Miami Beach. It's not too late. Art Basel's all weekend, and you can enjoy the art and the yacht.
We'll come.
Right.
We'll definitely come find you. Stephen Myers, founder and chief executive officer of Yachtco, on the phone from a lovely Miami.
Let's check in with Joe Matthew, who has Sound On coming up in just a few minutes. Joe, what can we expect?
Well, I'll tell you what, the government's not going to shut down tonight. How about we start with that?
Hey, that's good.
There's no shutdown tonight. We'll actually be, in business Monday morning. The question is, what about the debt ceiling, reconciliation, all the rest of it? We'll be joined by the chair of the Joint Economic Committee in Congress, Representative Don Beyer, coming up on Sound On.
All right, Joe Matthew coming up. What a week, Tim Stenevec.
Oh, it has been a week.
Get ready for next week.
I'm ready.
All right, everybody, have a good and safe weekend. Do stay safe, please.
money and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Didi is done. The Chinese ride-hailing app is officially planning to delist from the U.S. Why this could be just the beginning. Plus, Omicron keeps spreading, showing we're not done with the pandemic yet. How that's impacting plans to get back to the office. And top tech companies like Activision Blizzard and AMD are still not in compliance with a new law putting women in the boardroom. The deadline is just 3 weeks away. But first, it was the slowest job growth in the U.S. so far this year, despite unemployment falling. Given this mixed report and on top of the news that the Omicron variant is spreading, the U.S. Labor Secretary says he remains optimistic. He might feel good, though, about where the economy is headed. However, investors don't seem to agree. Let's get to our Ed Ludlow with a look at where things stand. Ed?
Yeah, look, we're taking the jobs numbers in our stride. It was a mixed bag, but the main takeaway for markets, it doesn't change the outlook for the Federal Reserve and its rate policy going into 2022. What do we see? Selling of risk assets and tech shares really bore the brunt of that. Look at what's on the board, specifically the NYSE FANG Plus Index, that kind of gauge of mega cap tech stocks and Chinese ADRs. They really bore the brunt of the selling. It was actually down by the most in one day since March, the biggest weekly decline since March of last year as investors pull out of those stretch valuation tech stocks. Also the Golden Dragon China Index. This is an index of purely US-listed Chinese companies, down significantly by the most since 2008. And of course, we'll come on to Didi in a moment. Also, broadly, cryptocurrencies were sold off as part of that. Coming into my Bloomberg terminal really quickly, I don't want to pick on one company, but let's talk about Meta, the company formerly known as Facebook. Since September, we've dropped almost 20%. Now, that is bear market territory. It's kind of become the poster child of this selling that's associated with the outlook for higher rates impacting tech stocks with stretched valuation. So I think we're down sort of something like 19.7% since a peak in September of $380 a share. It'll be interesting to watch that one to see if we enter technical bear territory. And finally, let's talk about Didi, a really significant drop. In fact, the biggest one-day drop since the company listed, which was only in June. It's trading at its lowest level since June, and the company's announced that it will delist from US exchanges, instead listing in Hong Kong. A lot to unpick there, but it certainly had broader ramifications for equity markets on Friday. Emily.
All right, Ed, thanks much. I want to stick with that big news from Didi and the broader implications of it all. I'm joined now by Bloomberg's Crystal Z, who covers public markets for us. So, Crystal, Didi plunging at the close, more than 20%. Walk us through what happened and what this means next.
Yeah, so Didi hasn't listed that long ago, and when we sat here right after the listing, we were hearing about how the Chinese authorities actually told Didi not to go ahead with the listings before they went ahead, and now they're having to unwind this whole thing, and they have to delist from the U.S., and they're considering relisting in Hong Kong, and the timeline they're looking for is trying to list by March, which is a little bit ambitious. I think what is interesting is that the entire ADR today is down. JD is down, so there probably will be bigger ramification in the U.S. market for all of these Chinese technology companies that listed in the U.S. since 2014.
What are the bigger ramifications that you see coming?
Yeah, so a lot of the ADRs are down today, and there should be more pressure from the Chinese regulators on other stocks as well. We have already seen a little bit of a homecoming, starting from Alibaba, where they also listed in Hong Kong as well. So you could probably see that as an insurance policy, where if anything happens to your your listing in the U.S., you already have a Hong Kong vehicle. I think what is really interesting is what hurdle Didi may face listing in Hong Kong, because Hong Kong's regulator, the SFC, operates a little differently as the U.S. regulator. You have to be fit to list in Hong Kong. You need to not just tick the boxes, but you need to be considered fit as a public company. So even though they passes all the political check marks, having to pass the Hong Kong exchange laws, having to convince investors again the second time within this short period that they should invest again, that would be a very, very big task.
All right, Crystal Z, thank you much. We'll obviously continue to follow and be watching that relisting a few months from now.
Meantime, NVIDIA shares saw the biggest intraday drop in a month after U.S. antitrust officials sued the semiconductor company to block its $40 billion takeover of chip designer ARM. Let's get straight to our Bloomberg News reporter, Ian King. Ian, what are the main points of contention with U.S. regulators here?
Yeah, I mean, what the FTC has said is really what NVIDIA's rivals have said all along, which is how can we trust one of our competitors to be the owner of this technology that we fundamentally all depend upon? How can we trust them not to prioritize themselves? And really that's what the FTC has said in bringing this case, and it reflects really what's going on in Europe and what's going on in the UK to an extent as well.
So what's next? I mean, clearly they've got these challenges in Europe, now these challenges in the United States. It certainly doesn't look good.
Yeah, no, I mean, we put in our story, there was a Citibank estimate that said, look, the chances of this being completed have gone from about 30% down to about 5%. So really, all along Wall Street hasn't really expected this deal to close, and now they really don't expect it to close. So then that turns the conversation towards, well, what does ARM do? What does SoftBank, which owns ARM, do with this asset going forward? All eyes are really expecting on when will NVIDIA give up on this. At the moment, they're saying, we're going ahead.
This could be a huge loss for SoftBank, right? I mean, what are the numbers we're talking about here?
Yeah, I mean, you mentioned this NVIDIA stock has gone down today, but this stock has been on an absolute, tear up until basically today. And that has massively inflated the value of the deal, which is paid for in large part in NVIDIA stock. Originally the total deal was worth $40 billion. By our calculations alone, the stock portion up until today was $57 billion. So obviously blown past where the deal was done originally. So SoftBank, if the NVIDIA transaction doesn't go ahead, has got to find something that's going to replace that. Going to be tricky in an IPO.
So what does this mean for NVIDIA's plans? I mean, let's say it doesn't happen, looking unlikely. What does this mean for their plans to become the king of chip design?
I mean, this has been an interesting idea in that really today was the only day where you've seen any kind of stock reaction correlated with any news on this deal. Investors all along have been nice to have, but guess what? Jensen Huang, the founder, he's doing a great job. They've created this new data center business. They have all of these other new technologies lined up that, NVIDIA is extremely well positioned, regardless of whether it gets ARM or not. Of course, ARM would be nice to have. It would diversify its bets, but NVIDIA can still use ARM technology and move into other markets anyway. That's at least been the argument that investors have had. So no real fundamental concern about how this positions NVIDIA.
Okay, we'll keep watching. Bloomberg's Ian King, thanks for the update. Coming up, we will have the latest on the spread of the Omicron variant, including a warning from President Biden's chief medical advisor, Dr. Anthony Fauci, that many more cases are guaranteed in coming days. Our interview with him next. This is Bloomberg.
has once again pushed back the date for its employees to return to U.S. offices. The decision comes with renewed concerns over the spread of Omicron. The company had set January 10th as a return date for the bulk of its workforce to be back in the office 3 days a week, but Google says it will reassess in the new year. Well, a short time ago, my colleague David Weston spoke with Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases and chief medical officer, of course, to President Biden. He began by explaining what officials are learning about this new variant that's now been detected in at least 7 U.S. states.
They're getting more and more information on two fronts. One is what the profile of people who are getting infected. In other words, we're trying to find out if there's any degree or not of protection, whether or not you're unvaccinated versus vaccinated versus having been previously infected. So that's going to be very relevant, because the ultimate question that's going to be important for us here in the United States is, if you have been vaccinated and boosted, given the mutations that this new variant has, what is the chance of protection against infection, and if not infection, against severe disease leading to hospitalization? So we're learning about the severity of the infection and the profile of the people who are getting infected. As you well know, we are starting to see cases literally, every few hours to a day or two in the United States. And as we approach the weekend, we're going to probably see more and more, because once it is here, there's no way that you're not going to see more and more cases. The real question is, in the fact that we have a background of Delta variant, which is very dominant and has essentially pushed all the other variants off the board, where is Omicron going to be in relationship to Delta? Will it take off and become the dominant variant? Or will it essentially get a bit smothered by Delta the way all the other variants? The only way we're going to know that is to wait and see. And that's exactly what we're doing. But we are getting important information from our colleagues in South Africa. I have a Zoom call with them tomorrow morning, so we should get another update in the morning.
So let me ask one question specifically about South Africa, because there's some information coming out of South Africa that the number of cases is going up, which is not a surprise. The number of hospitalizations, I believe, is not going up certainly as dramatically. Should we read anything into that, or is it possible that's just a matter of a delay, a lag, as it were?
I think the latter. In order to get a feel for the relationship between infection, a high degree of symptomatology, hospitalization, and ultimately death, you've got to have a lot of patients get infected, and you've got to follow them for at least several weeks. So although it is encouraging that they're not seeing any concerning signal, like all of a sudden a lot more hospitalizations, that is comforting, but it isn't definitive. We really need to wait until a lot more people are recognized and identified who get infected to be able to make any determination about the degree of severity.
Dr. Fauci, if we go all the way back to Monday, a whole 5 days ago now, when we saw you with President Biden, what do we know differently from what we knew then about this Omicron?
Well, we know that it's here in the United States, which I actually, wasn't anything brilliant on my part, but we predicted that when you see it spreading throughout countries in Europe and Asia, obviously you're going to see it here in the United States. The real big question that we don't know now is what I mentioned just a moment ago, is how is it going to fare in a world, and the world being our country, in a world in which Delta is the dominant variant. That's going to be a very interesting situation to watch.
All the way back on Monday, you said, as you suggest, it's going to come to the United States. You were right. Let me ask you a different question. Community spread. Is it inevitable at this point? Do we already have community spread in this country? Because that may affect questions of travel restrictions, right?
We absolutely have community spread in this country. We have community spread with the New York, Minnesota case, where someone was in Minnesota, went to a conference in New York, got infected, and people with whom he had contact with also got infected. We don't know how many of them, but there's no doubt that there's community spread.
You can catch more of that interview at Bloomberg.com. White House Chief Medical Advisor, Dr. Fauci. Meantime, Twitter's new CEO has wasted no time making his mark on the company. Days after the departure of Jack Dorsey, new boss Parag Agrawal has restructured the executive team with no less than 2 department heads stepping down. Dantley Davis, who ran Twitter's design and research, is leaving the company, as is Michael Montano, engineering lead. Twitter says these moves are part of an effort to, quote, drive increased accountability, speed, and operational efficiency. Coming up, the need for more diversity in the boardroom. Activision Blizzard is one of several companies that need to add more women to their board of directors, and soon, in order to comply with California's gender parity law. More on that next. And let's take a quick look at DocuSign shares plummeting in its biggest intraday drop ever after the e-signature company's revenue forecast for the current period fell short of analysts' expectations. At least 4 firms tracked by Bloomberg downgraded the stock, saying it'll take time for DocuSign to get sales growth back on track. This is Bloomberg. keeps advancing towards his goal of selling 10% of his stake in Tesla. According to a filing, the world's richest person offloaded another $1 billion worth of shares in the electric car maker. The purpose of the share sales are to help him offset taxes. Musk has now sold about 10 million of the 17 million shares he'd need to reach that 10% threshold. And the deadline is fast approaching. As we near the end of the year, some major companies have yet to add more female executives. Activision Blizzard and AMD are among companies that still need to comply with a California law requiring, among other things, that companies with boards of 6 or more directors need 3 women by the 31st of December, or they risk a big fine. Both Activision and AMD only have 2 women on their boards as of now. Let's talk about this and more with Boardspan CEO Abby Adlerman. Abby, great to have you back with us. Activision and AMD are lagging. Is this a surprise or no?
Yeah, you know, it's a little bit of a surprise just because they've had plenty of notice and there's been a lot of talk about this subject. So there's not a lack of supply of candidates. It's probably a little bit of a lack of motivation.
Do we expect them to add these directors before the end of the year? We've got 3 weeks left.
I think every company's sort of touch and go. I would say I think we're going to see a rash of appointments in the next few weeks because people don't want to be called out. But there's a lot of companies that are resisting sort of the sense of having some pressure around it. And it's a pretty big number, as you know, Emily. Over half the companies are not in compliance. That's a lot of board members to come out in the next few weeks.
Absolutely. There's a trial underway right now to determine if requiring women on boards is legal. Where is that headed?
Yeah, I think it's probably pretty risky for people who are advocates of this law because there's a lot of questions. Even when Governor Brown signed that law a few years ago, there were questions about whether it would hold up in the courts. But I want to point out that it's a lot more than just a legal issue. I think what's really at stake here is the court of public opinion. And that's where the law, whether it gets through this trial or not, that's where the law's had a really, really big impact. And a lot of people are pretty happy about the visibility it's given to the issue.
When are we expecting a result of that particular trial?
That could take a little bit of while, and it really depends upon, how long the deliberations are going to be. So I'm not going to predict the outcome of the legal system. I think we've all found that could be a little risky. But I will say that I think regardless of the outcome there, I think the statement has been made. And the statement by people who support the law and the people who are against the law, I think is pretty clear.
So let's just play this out. I wonder if some of these companies are thinking, hey, we might not have to do this if the law is deemed illegal. If it is deemed illegal, what happens then? So, the interesting thing is, what's the penalty for not complying with the law right now? It's actually not that big in the grand scheme. It's $100,000 to $300,000, depending upon, how many infractions you have. And in the grand scheme for all these companies, that is really pocket change, at best. I think the bigger issue is how investors are perceiving it and some of the other constituents. And what we're hearing more and more, and you started off with Activision as a great case, thinking not only just from the major institutional investors, but the employees and even the customers. And that's where the voices start getting really loud. And I think that is pretty much a permanent change that we're going to see, regardless of whether it becomes a legal or a regulatory issue. People are demanding more. Sorry. Exactly. Well, my next question was, how much progress would you say we made in the last year alone?
Yeah, I think we made some pretty good progress. I mean, California is up to a little over 30%, and that's good progress. I think a lot of people are going to be pushing for 40 or 50, but I think the trend is set. And even if companies aren't going to get to that true goal, I think we're not going to go backwards. And that's really what I'm counting on. Now, I might be the optimist, but I talk to an awful lot of boards, and that's what I do all day, every day, as you know. And I'm hearing a real commitment to diversity, and that's what gets me excited.
And what about Silicon Valley? Obviously, Silicon Valley makes up a large part of California, but does Silicon Valley still lag the broader industry, broader corporate America, or are they catching up?
Yeah, no, they do, unfortunately, and it is really specific to the tech industry. As you refer to Silicon Valley, one of the challenges, and we get asked about this a lot, is why is tech falling behind? And I think it's a combination of a few things. First of all, tons of growth companies, so they tend to be a little bit smaller. But also there's kind of this funny, insular, almost clubby feeling within Silicon Valley. And here's the ultimate irony, Emily, which is Silicon Valley, people are very used to taking risks, whether they're the tech companies themselves or the VCs that are funding them. Yet it's a really risk-adverse move, in my judgment, as to why not diversify your board. Because diversifying your board is usually about bringing people onto the board that are not the people that are most like you, right? So you really have to be intentional about thinking about wanting something different. And that feels risky to a lot of people. And that's why I think Silicon Valley is lagging. That said, I'm an optimist, and I think as people lean into it and think about the benefits, it does change.
If we can build self-driving cars and rocket ships to space, then certainly we can find more women for our boards, right? What other, quickly, corporate governance issues are you following into next year?
You know, the big issue on everybody's mind is ESG, and it's not unrelated to diversity. That is going to be a subset of it. But I think right now boards are really trying to wrap their heads around what does it mean to be a high-performing board with ESG? How as a company do we deliver? How do we even report? Because it's really vague. So that is a huge issue. Another really big issue is going to be around succession planning for CEOs. We've seen a lot of real-time stories even this week about companies and boards not being prepared for how to sort of grow into their next management roles and how to have somebody waiting in the wings. So I think that's going to be a really hot topic as well.
Boardspan CEO, Abby Adlerman. Abby, thanks for bringing your perspective here to us today. Coming up, another industry where there's a gender imbalance, and that is crypto. Twice as many men than women own crypto. What one platform is doing to bring more women on board. That is next. And as we head to break, Bloomberg has learned that Sony's PlayStation division is planning a new subscription service to compete with Microsoft's Xbox Game Pass. Sources saying the service, codenamed Spartacus, will allow PlayStation owners to pay a monthly fee to access a catalog of modern and classic games. This is Bloomberg.
Overall, a strong report.
Much, much better than the headline would suggest.
It's a good report across the board.
The headline number was a bit softer than we were expecting.
Jobs growth was disappointing.
A lot of that looks like seasonality and the impact of seasonal flows.
It's exactly the kind of report that the Fed actually wants to see.
There's no ambiguity. Even the Fed has a window
to move, and obviously they can take advantage of it.
They have to start moving.
They have to move.
Our base case is for the first hike in June, but the risks are certainly tilting towards earlier.
They have to make up that lost ground, and maybe that means faster hiking rates.
If you go faster than you normally want to go, you risk breaking something.
The Fed now is looking at raising rates into a decelerating growth backdrop. We think they're going to have an awfully hard time doing that.
The Fed is going to have to be very smart, both in what it says in its communication and its in policy implementation.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Guests on Bloomberg Television there reacting to the latest jobs data showing the slowest growth in payroll for a year. Let's get back to the markets with our Ed Ludlow. Ed, investors have had a lot to digest this week, and that risk-off mode has hit crypto as well.
Yeah, exactly. I mean, if there was a consensus on Friday, it was that the jobs data didn't have enough to change the course of the Fed. It didn't have enough to change the outlook for a tapering or a rate rise. There was a sell-off in risk assets, and cryptocurrencies joined the fun. You see the Bloomberg Galaxy Crypto Index, that kind of gauge of the main cryptocurrencies, down 6%. Of course, we trade 24/7 in the world of crypto, right? So we're spilling into Saturday's session, and Bitcoin continues to be under pressure. Interesting, though, wasn't it just a few weeks ago that we were talking about Bitcoin as an inflation hedge? Well, the Fed is going to raise rates, isn't it, because of inflation? But it's not really played out that way. Come into my Bloomberg terminal, look at this chart. The correlation between Bitcoin and stocks is growing. You see there on your screen a reading of almost 0.5. A 1 would be a perfect correlation. In other words, stocks and Bitcoin moving in lockstep. A -1, -1 would be them going in opposite directions. So Bitcoin is not behaving as an inflation hedge. It's not behaving as a haven asset on a day where we saw people pile into treasuries and yields come down. It's really part of this risk-off sentiment. And of course, that also extends to stocks, right? Companies that interact with cryptocurrencies or related to cryptocurrencies. And this is where we saw really heavy selling. Marathon down 15%, Riot Blockchain down 13%, really heavy outsized selling. So the question begs, what is cryptocurrency, right? Particularly Bitcoin. Is it an inflation hedge? Is it a safe haven? Didn't appear to be on Friday, Emily.
All right, Ed, thanks much. Well, the crypto industry has been growing fast, but not everyone is getting equal access to it. How to give more women a piece of that expanding pie? The crypto platform OKCoin just announced a $1 million commitment to reach the goal of 50% female customers by 2025. I'm joined by OKCoin CEO Hong Feng here now for more on this. So talk to us about this $1 million commitment. What in practical terms does this mean you're going to do?
Yeah. Thank you for having me, Emily. We are in an industry that is very emerging, which means that we are seeing a lot of great people joining the space, promoting innovation, standing up to fight the status quo. We see a lot of female voices, strong female thought leadership, and leaders who are building new things. But at the same time, there is a very obvious gap in the number of people who are in the space from female versus male kind of ratio. So we feel very strong about making crypto inclusive, giving everyone this equal access to what is coming up in the next 10, 20 years and 30 years. So we want to do our share. So we are committing $1 million in the next few years to really help more women to get into this industry, which means that we are going to partner with different organizations to provide better education to women participants, who are going to provide sponsorship to developers working in this space who want to actually participate in this innovation wave. And we're also going to help with bringing more voices to the world, because part of it is how to give people more access, but the other side is also how we describe it, how we present our industry and how we present everyone in this space, even if there are differences.
Twice as many men as women own crypto, and it's a bigger gender gap than we see in traditional assets. Why do you think that is?
Here's my read. I think, first of all, crypto, when it was started 13 years ago, when Bitcoin was created, it was created as the very native, the first native money that is very different from the traditional concept of money. So that in itself means that it is a break from normal mentality, normal mental framework. I think in general, if you really want to stereotype it, female tend to be more conservative when breaking away from normal way of thinking to challenge the status quo. So I think that's probably a part of the things that is playing a big role here. And the other thing is, again, it is a very new emerging trend. So it's possible that it hasn't reached as wide a audience as it should be over the long term. So it's up to everyone in this industry, every participant in this industry, to really promote the awareness, to educate. Because many times when I'm in this industry, I was asked, how do you feel about being the only CEO, female CEO of a global exchange platform? The truth is I don't really feel it because I'm surrounded by 50% of female members on my team. So you don't really feel it once you're in it. However, it's very difficult to take the first step, to make the first leap of faith. So I think that educational piece is going to be really important.
How do you think the gender gap in crypto is reflected in the kinds of deals that are done, the way that investments are made?
I think if we talk about the gender difference here, there is a possibility of falling into a stereotype. So at the risk of stereotyping gender differences, I would say that maybe females are more inclined to look at long-term value, look at what is going to happen sometime down the road, and male probably are more open to short-term trading activities. But again, I feel like that is a very stereotyping activity. I think over time, as you bring more and more people into this and raise the awareness, and also remove the perception that crypto is another boy club, I think you'll actually start to see more equality. And to be honest, we are in Miami for the week of Art Basel. And yesterday we had a women dinner that we are hosting. There are more than 40 women, female leaders, thought leadership, content leaders, builders, entrepreneurs who are at the dinner event. It was great to see a lot of smart, confident female leaders in the space. So it's also a matter of how we make sure that their voices are heard.
All right, well, it's good to meet and hear from another female voice in crypto. Hongfang, OKCoin CEO, thank you for joining us. Meantime, Wikipedia is entering the NFT game. Jimmy Wales, co-founder of the free online encyclopedia, is selling a non-fungible token based on his first edit of the website, which reads, "Hello World." Auction House Christie's will take care of the sale of the token alongside the Strawberry iMac that Wales was using around Wikipedia's launch. The funds will go toward charitable causes and WT Social, a donation-backed social network that Wales launched in 2019. Coming up, Didi's delisting could have broad ripple effects through China and maybe even U.S. markets. I'll speak about that with Race Capital's Edith Young, plus get her take on the future of crypto. That is next. This is Bloomberg. now to Didi and what it means not only the company, but also China and Wall Street. Joining me now, Edith Young. She is a partner at Race Capital. Edith, boy, Didi really taking a beating. We're we're expecting them to relist in Hong Kong in a few months. But what does this mean?
I think it's really, really sad to see what's going on, but there's a few things that's happening. One is just because they announced that they want to get listed on the Hong Kong Stock Exchange does not mean that they will get listed. So the original, there's some record that only 20-30% of the rise 100% compliance. Hong Kong listing rules are actually quite vigorous, so it doesn't really mean that they will get listed. But what's really interesting, I think, longer term for Chinese companies, the exit route or strategy probably will actually focus on more Hong Kong. If you look at the BAT, Baidu, Alibaba, and Tencent, all of them are actually listed in Hong Kong. And very likely, if we think about ByteDance, which is now valued $400 billion, or companies like Lala Move, there's a lot of really interesting Chinese companies probably won't get listed in the US anymore. And especially if you think about Chinese companies are really walking on the eggshell to please Chinese government, to please US government. They really sort of get caught in between. And now slowly more of center of the universe for exit will be Hong Kong.
So how many more companies do you think we're going to see this happen to?
It's hard to say. I think particularly Didi, because there's so much sort of transportation data, sensitive data. So what's going on? Didi is particular, very, very, and by the way, even though what's going on in the stock market, they still have 70-80% of the market share in terms of